Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, March 24th. We are heading into the final trading week of March, and then we will get into April. And today, well, we're green. We are more green than we have been in a very long time across the entire equity markets. The S&P 500 gaining 1.2%, and we have regained the 200-day beautiful moving average at $570 on the S&P 500. We're there in the pre-markets. Bitcoin, $3,000 away from 90,000, 87.2 right now. Palantir up another 3%. You've got Robinhood up another 5% at 46.50. You've got SoFi up 3.5% at 13.31. GameStop is up. Reddit is up. Rivian is up. Venture Global is up. Hims is up. Nike is up. Block is up. Tempest, Google, Amazon, Microsoft, Meta, Nvidia back above 120 in the pre-markets. This thing was almost at 110 last week. I mean, this has just been an incredible, I guess you could call it Friday heading into Monday. Last night on the Sunday Future Show, we kind of saw a preview of this. Tesla right here as well, up 4% at 258. Tesla's now up 22% from the lows of 215 about 2.5 weeks ago. We're green. We are green, green, green. It has been a while since we've seen this type of green, but we are seeing it. And look, I think it's exciting. We're going to be analyzing why we're getting this green. We're going to be analyzing if this green is actually sustainable to last. I think there is some merit based on the breaking news that came out last night, literally right after the futures show ended. Like the show ended and then the headline came out, and the headline actually gave a lot of credence to why futures were so green. Because I think last night everyone was trying to figure out, like, why were futures that green? And, you know, you could say it was a continuation of Friday, but there was another reason. And that reason happened right after the show ended, so we didn't get to talk about it last night, but we'll talk about it today. And it's kind of, it actually, quite frankly, is going to a thesis that we had on the show a couple of days ago that we've been speaking about for the past week. It has to do with tariffs, so we'll talk about it. But that could be a reason why the market is going green right now. So we'll talk about that. We got some other headlines. We got some macro data coming out today. This week is going to be an important week for home sales, consumer confidence, PCE, those types of data. We also have the Robinhood event that I'll be at on Wednesday. So that'll be big just to see what Robinhood can put up, if they can cook up some really cool stuff that can get the street excited. Robinhood here trying to get back to $50. I mean, could they do it this week on a bunch of new product announcements and a good macro environment? Maybe. 46.48 right now. We're going to have to see if this is sustainable, but very exciting for Robinhood. We do have a new Palantir deal as well with HD Hyundai, which is a partnership they've had for a long time. So a new kind of extension of explaining that partnership came out today. And so we're going to be talking about that. And then Tesla, we got a variety of things to talk about on Tesla. It's up 4% right here. I think the biggest question on everyone's mind is this real? Is this like a rally from the lows that makes sense? Or is this an egregiously overvalued multiple that people are deciding to pay on Tesla simply based on the hype of Tesla going from 215 to 260? Maybe. So we're going to analyze kind of how this is playing out, what the analysts have to say about Tesla, and if this multiple has the ability to sustain itself. I think the first question I'm going to ask right here before we get even started with everything is, do you trust this green? Let's get a gauge on what people think. Do you trust this green? I want to say yes, but I also want to say we're not necessarily out of the woods yet in terms of the pain from a variety of different macro conditions. The 10-year is up right now, which is not necessarily good. However, once we get into the tariff discussion, I think it'll illuminate the reasoning for why we're having this green, and if the logic behind this new reason that has come up over the past 24 hours is legit. Yeah, maybe April we're going to the moon. I mean, because if we don't have any tariff volatility and earnings growth is good, what's stopping the stock market, right? Like, what's stopping people from buying up equities? It would have to be something that creates a difference between the perceived equity risk premium they're paying on stocks versus other assets. And if there's just not enough volatility to detract from earnings growth or consumer confidence, yeah, I think April can be really good. So we're going to see how this plays out. The poll is 50-50 immediately. Wow. 50-50 immediately. That's what we got. All right. Well, some people trusting it, some people not trusting it. Good morning, everybody. Thank you for being here. Quarantine Quartet, what's up? Wong, P. Morton, Siren, Joe, Dougie Dollars, what's up? He says, don't ever trust the green in this market. We are learning. It's a little bit hard to Trust the Game. B-Sob, what's up? Good morning. Tim, Brian, Mitchell, June, Martin. Thank you all for being here today. VIX did drop this morning, so we are getting about a 2% decline on the VIX, which is nice to see. I will be doing the open on Wednesday, and honestly, I think I'm doing the close on Wednesday because the Robinhood event is late at night. So I think when the only day I'm missing the close this week is on Tuesday because I'll be flying. But I think the rest of the week will be normal schedule. So we should be good. Jason Scott says, I won over 2,000 on NCAA contracts yesterday. Dude, the amount of people that have been traded, 95 million contracts have been traded in the past week and a half since Robinhood launched this product. I mean, I think Hood makes like $2 million of revenue off all those contracts. But like, dude, this could be a really big market for Robin, like a really big marketplace. So I think they'll expand more on that at the gold event as well. And we'll get more updates from there. Crowd Control, what's up? Mark, Nivelle, Jimmy Lee, Chad, good morning. Good morning. Raphael, William, thank you all for being here. All right, let's get started. And get into this. By the way, I just want to say this right now because I told you guys on the show last night. I watched Severance. So I did start that show. So I saw the first 2 episodes, then I fell asleep during the 3rd episode. Then I came to do the show. And my cousin's over from California, and my sister and my cousin binged like the other 3 episodes while I was doing the show. And so I came back, and so I missed a good chunk of the season, but I caught the finale. I know it's a stupid way to watch a show, but then again, this is probably what I would do anyway because like it's hard for me to get through every episode. And I saw the finale of season 1 yesterday, and it was great. It was awesome. Season 1 was great. So I have officially watched season 1, even if I didn't literally watch every part of season 1. But I got the Spark Notes version of it. And I thought season 1 was pretty cool. I haven't started season 2 yet. We'll see what happens with season 2. Did you miss half the season? Yes, I missed half the season. But I feel like now that I know the ending, I don't really need those other parts of the season that I missed. So it is what it is. But I'm going to claim credibility now as someone who is, engaged in Severance. We don't have to say watch Severance. Watch is too hard of a word. But we can say, I've dabbled into the show. So yeah, I'm a Severance guy now. But season 2, I'm actually going to watch fully myself. I'm going to actually watch the whole thing. So I'll let you guys know what season 2 looks like. But season 1 was great. It was a great show. I loved it. It was awesome. So put that on the list of shows that I've watched. Steve can't talk shit now about me not watching new shows because we're in Severance. So there you go. First 2 shows and the finale. That's all you need, baby. That's all you need. Bro, don't spoil it. Dude, I don't know enough about this damn show to spoil it. So don't worry. That's probably not gonna happen. All right, let's talk about tariffs. So this is the headline that came out last night that happened after the show, and that's why we didn't get to talk about it yesterday. But this is why markets are green. So what have we been saying on the show for the past 5 days last week? The number one thing my gut feeling has been, I don't think the April 2nd doomsday that the media is hyping up is going to be that crazy because I don't actually think Trump wants a trade war. I think he's using this as negotiation. I don't really think he wants to have this massive trade war with Canada, Mexico, etc. Well, Wall Street Journal reports last night, White House scales back April 2nd tariff plan, focuses on targeted reciprocal tariffs. Sectoral tariffs on cars, chips, pharma, unlikely to be announced on April 2nd. That's a big deal. The automotive industry, the pharmaceutical industry, the semiconductor industry, all of those, as per the Wall Street Journal's reporting last night, which maybe it's not true, but from all the other sources I've seen, it seems like this is correct, and that's why the market's reacting to it. They are saying, hey, these tariffs that Trump's been saying, 25% across the board, all those industries, yeah, that's not happening. That's just, that's not going to happen. And so April 2nd is not going to see those dramatic tariffs across those core industries. Reciprocal tariffs are still set to hit up top trading partners, including Dirty 15, Canada, Mexico, EU, among nations facing higher duties. So this report from the Wall Street Journal last night was kind of the core reason I think that futures got excited, because essentially they're saying, hey, we are going to expect tariffs from the Trump administration on April 2nd, but they're not going to be to the extent that you would think would create so much pain in the broader equity markets, because sectors like chips, pharmaceuticals, and cars are going to be left out of the out of the equation. So the Wall Street Journal writes right here, though it will still hit most imports coming into the U.S., the administration's Dirty 15 approach is still a narrower one than many observers anticipated when Trump ordered federal agencies to design reciprocal tariffs in February, directing them to evaluate trading relationships with virtually every U.S. trading partner. The White House had previously considered grouping trading partners into 3 tiers of high, medium, and low tariffs. We had that headline last week, but turned away from that plan in recent weeks in favor of giving each targeted nation an individualized tariff number. AKA, we're going to be very specific with how we do these tariffs because they can have massive impacts if we don't do them effectively. Nonetheless, the administration's plan for April 2nd could raise tariffs on the U.S. most significant trading partners to levels not seen in decades, and people with knowledge of the planning said that the targeted nations can expect to receive significantly higher tariffs. That's still bearish for the broader markets because it creates more volatility, but now the market can at least price in the extent to that volatility might not be as aggressive as they thought about over the past couple of days, which is probably why stocks are being bought up right now. Trump's team could make tariffs effective almost immediately on April 2nd using the president's emergency economic authority, said people familiar with the discussions, emphasizing that final decisions haven't been made. That would be a shift from February when a White House official said a report outlining reciprocal tariffs could be released that day, but imposition would come later. So April 2nd doesn't look like it's going to be that bad. It's definitely going to have tariffs involved, and those tariffs are going to be reciprocal, but they're not going to be to that same extent, which I think is probably why stocks are getting some momentum right now. And again, you don't have to be a genius to kind of predict this. We've been talking about this for the past couple of weeks on the show. I think a lot of you guys agreed as well that no one expects him to just go gung-ho like it's going to be this massive aggressive trade war with Canada and Mexico, maybe with China, maybe with the EU, but Canada and Mexico, at the end of the day, those are some of our biggest allies, and you just don't isolate them economically to such an extent, and you probably don't want to, which is what I think the Trump administration has a approach with, but they need it to seem tough. And so now it seems like, yes, there will be reciprocal tariffs, but maybe it's not as aggressive as we thought before. So is that enough of a reason for the markets to be going up right now? That, my answer is I genuinely don't know. I'm going to be a little bit humble here and say that this is not just the V-shaped recovery off the dip and we're immediately going back to where we were, because you just don't know. You really don't know. I think if we see this for the next couple of days, we might have a little bit more of a solidified base that you can count on, especially if Q1 earnings growth starts to continue to justify the multiple expansion we've seen. But I think it's hard to be like, yep, we've officially bottomed and we're going back up, because you just don't know what could happen geopolitically or tariff-wise to create more pain. Nonetheless, if you bought the dip at all when the S&P was down 10%, you've done well. Right? Well, no matter what stock you bought the dip on, I mean, you would have to really find a stock you bought the dip on that hasn't recovered, or at least started to recover. But pretty much, I mean, Grab got to $4, Robinhood got to 32, Palantir got to 70, S&P 500 at 549, Nvidia got to 104. I mean, all these stocks are well above those prices. And the question is just going to be, can they maintain and sustain a lot of the love that they've had right now? Doug says, you never know if the V recovery is in, and if you're waiting for confirmation, you've already missed it. Yeah, that's a good point. That's a fair point. I mean, this is the whole nature of why buying the dip and time in the market versus timing the market matters so much. But I mean, we're going to see. We're really going to see if this thing has the momentum to sustain itself. One of the things that's making me pause a little bit is, again, the administration says they want this 10-year to come down. This 10-year is not coming down. Not coming down to the point where they need this thing down to at least 3.8, realistically 3.5, and that's not happening yet. Now, granted, I feel like it kind of should be down, because if tariffs are inflationary, and the Wall Street Journal is reporting that pharmaceuticals, cars, chips are not going to get these massive 25% tariffs, that's less inflationary, right? So you could argue that the 10-year should be being bought up on that. But if the rest of the tariffs that are going to be instituted from a reciprocal perspective are still very inflationary, then yeah, I could see the 10-year being sold off on that. But we're going to have to see. I mean, we're really going to have to see how this plays out. Also, you could argue that people are selling off the 10-year to buy stocks, right? And that could be creating some more volatility to the upside on the 10-year, which is great for stocks, not great for the bond market, or particularly the bond yields that the administration wants to see come down. So I don't know. I just feel like it's a little early to be like, yes, we've definitely bottomed. But I think it is encouraging to see this price action across the board. I also don't think this price action is egregious. SoFi at $13.30, is that egregious? Is that SoFi at $24? No, SoFi probably deserves to be closer to 15 right now. Grab at $4.70, is that egregious? Absolutely not. Robinhood at 45, is that egregious? No. So some of these prices, even Reddit is, it's at 120. one could say that's overvalued, but Reddit was at 230. So we've seen a multiple compression, and now we've seen a little bit of expansion from 105 to 120. That's not crazy in my opinion. Apple at 218. Yes, I think Apple's overvalued, but I don't think Apple at 218 is like the most overvalued company in the world. So I don't think stock prices are ridiculous. I just wonder if they have the juice underneath them to maintain what they're seeing right now. VIX is 18.89. Yes, the VIX is currently down right now. Where is SMCI and the semis? SMCI is down. All right, so SMCI is down. That's weird. You would think that one would be up right now. All the semis are green except SMCI, huh? Was there an SMCI headline? Nvidia's up 2%, AMD's up 3%, Dell's up 2%, everything's up. ASML, Broadcom, Qualcomm, TSM, Marvell. SMCI, the only one that's down here right now. Oh, Goldman downgrade. Okay, there you go. What did they say? What did Goldman say? What did Goldman say? Did they say something about margins? They said, yep, margins. Dude, margins, baby. Margins. There you go. Upgrades or downgrades from sell to sell from buy lowers price targets to 32 on AI server competition margin pressures. That's always been my, like, I wouldn't say bear case, but my like concern with SMCI is just like the margins are like realistically not good, even though the growth is amazing. They just can't bring a lot of that to the bottom line. Interesting. You know, the biggest takeaway for me on GTC was NVIDIA, Jensen not mentioning SMCI. I mean, he mentioned Dell, he mentioned HP, he did not mention SMCI. It's just weird, dude. It's like you would think he said their name in all the previous conferences, even when they were going through the accounting stuff. But in this one, he didn't. So, all right, you got a downgrade right there from Goldman back down to 40. Yeah, JP Morgan upgraded to 45 last week, though. So it's really, sometimes with these sell-side analysts, you got to figure out which one you actually trust. Because at the end of the day, just because their name is associated with Goldman doesn't mean, you know, they're the smartest person in the world. We've seen time and time again that's not the case. So it's really a question on the logic of the reports and which ones do you think actually make sense when they put out their analysis. So yeah, that's the reason we're up right now. The reason we're up is, in my opinion, on this Wall Street Journal article about tariffs that are going to be delayed. The White House hasn't really confirmed this, though. I mean, Trump hasn't tweeted anything about this. The only thing Trump tweeted yesterday was shilling his own meme coin, which is absolutely insane. I think it's disgusting. But I mean, he couldn't even get it pumped for like 10% for like an hour, and then it went right back down to where it was. So yeah, Trump didn't tweet anything about tariffs. He tweeted about meme coins. I think this is so stupid. It's ridiculous. It's like just insane that the president of the United States is doing this, but it is what it is. He has presidential immunity. Probably nothing's going to happen because of this, but I hate that he's doing this right now. But he didn't tweet about tariffs. And so maybe that's kind of already a pseudo confirmation of the fact that the Wall Street Journal got it right and that the administration, but quite frankly, the Wall Street Journal could have got the leak from the White House because the White House wants the Wall Street Journal to put out that they're not going to be as aggressive on tariffs anymore. So we'll wait for confirmation, but it does seem like that is going to be better than not in regards to what we should see on April 2nd. Where is the Trump coin right now? The Trump coin is up 7%. So it's up 7% for the first time in a while. It was up 12% yesterday, but yeah, still, I mean, people bought this thing at $80. It's at $11.70. I don't know if Trump will be able to pump it back to $80. It absolutely is securities fraud, dude. It is ridiculous that he's doing this. And I do not condone this at all. It's insane for someone to have that much power and then to pump something that obviously has no value and do it like explicitly. But I mean, this is the state of the current White House right now. So regardless, he didn't tweet anything about tariffs. We'll wait for him to say something about tariffs today. I don't think Trump's going live today. He was live for like an hour and a half on Friday, taking a lot of questions. I don't know if he's going to be going live today again, but we should be getting more updates from him this week around tariffs. Here's an update on South Korea announcing a $20 billion investment in the United States. This will transition us into Palantir. So let's take a look at this, and then we'll get into the Palantir news for today.
Talk more about the market.
Hyundai making a big investment in America. CNBC's Seema Modi joins us now with more. Seema, good morning.
Hey, Joe, good morning. We are hearing from sources that South Korea's Hyundai leadership team will be at the White House today to announce a $20 billion investment in the U.S., $5 billion of which will be used to build a plant in Louisiana that will hire about 1,500 workers and produce high-quality steel for the cars that it manufactures here. The announcement will be made by Hyundai's chairman alongside President Trump and Louisiana Governor Jeff Landry. It's the latest foreign player following TSMC and SoftBank to make that trip to Washington and pledge U.S. onshoring in hopes of avoiding a trade war ahead of the April 2nd reciprocal tariff deadline. Hyundai CEO Jose Munoz recently saying the best way for Hyundai to navigate tariffs is to increase localization. So that's what they're doing here. It is a top seller of electric vehicles in the U.S., competing directly with Tesla, with plans to open a third automotive plant in Georgia this week, guys.
Seema, is this all new? Because I've had people, people always have an axe to grind, that some of the provisions in the IRA had the Louisiana plant already in the works. Do you know is there anything to that? Because then I saw other things that said it was purely based on anticipation of some tariffs from Trump.
I think you're absolutely right. This Louisiana plan has been in the works for some time, but now being sort of fast-tracked here in a race of the April 2nd reciprocal tariff, where countries like South Korea are trying to do whatever they can to get around it. And now using this $5 billion investment in Louisiana, upping the ante to say we'll put $20 billion altogether into the U.S. to avoid and dodge tariffs, Joe. So overall, the trade story is certainly picking up speed here and pushing more countries to make these bigger investments.
Now, this is kind of what the Trump administration wanted, right? They wanted countries who didn't want to deal with the pain of tariffs to start investing in the United States. In this case, it looks like this is a new $20 billion investment coming from South Korea. One of those companies that's making that big investment, HD Hyundai, has revealed an unmanned surface vessel with Palantir today. So HD Hyundai and Palantir have been working together for like the past 3-4 years now. They have a $45 million 5-year contract, and they've been revealing a ton of new different products, particularly around shipbuilding, because that's what the company does, and Palantir is their kind of operating system for it. And today they unveiled Tenebris. Tenebris, translating to darkness in Latin, comes amid a flurry of concepts by industry to meet the demand set forth by emerging programs and initiatives in the U.S. for these new unmanned systems. Naval News had the opportunity to talk to HD, HI, and Palantir representatives to learn about this new system at the AI Expo. And basically they said that the unmanned surface vehicle Tenebris is going to be one of the core defense products that South Korea is going to be using, developed by HD Hyundai along with Palantir. So this is really cool because, again, we are seeing a lot more work from an international perspective that Palantir is doing in the context of defense. And we don't know the extent of what this contract is, how much money it's going to be, but we are seeing that this is the first PR for Tenebris in a long time. And it's one of the first updates we got from Palantir in the context of working with one of the biggest South Korean ship manufacturers that there currently is right now. Palantir, are we up a little bit in the pre-markets? Palantir, we are up 2.97%, 93.66 currently right now. So if this South Korean investment is new, which again, we still have to see if it's exactly new or if it was an investment that was going to happen anyway, if they're doing it to dodge the tariffs, theoretically, you can argue that it's a good thing and that it's happening in spite of the tariffs or as a way to deal with the tariffs, which is what the Trump administration wants. Even if it's being fast-tracked and it's an old investment, at least we're getting that money into the United States. And given it's a company that works heavily with Palantir, we might see some more announcements with them together as well. So that is the update we have in the context of Palantir. In terms of other news updates on Palantir, nothing too crazy. We talked about it last night. Again, the multiple on Palantir is still pretty aggressive, trading at 95 times price to sales. However, if the bottom this cycle in terms of the pain was $71.77, I mean, I'll take that. If the bottom was really $70, where all of us know $70 is still very aggressive, given the stock was at 16 last January, and that was the max pain. I mean, yeah, it probably sucked at 71 for a lot of people, but it couldn't have sucked more than if it dropped to 40. And we did not see that type of an epic collapse. I mean, the bears so far have been wrong about Palantir going back to 40. Maybe they'll be right over the coming months. Who knows? But so far, they said the multiple would get absolutely destroyed from like 125 to 30, $40. And we just haven't seen that yet. And, maybe it's retail's not selling. Maybe it's institutions still want to hold it. Maybe it's just the market feels Palantir has so much potential and they're willing to give it a shot. But this extended premium that we've been holding on to, the only way I think we really mess it up, well, there's two ways. The macro takes an absolute crap, right? S&P falls 10, 15%, then it could happen. Or Palantir messes up earnings. And ironically, I am more confident about Palantir not messing up earnings than I am about the macro. So yeah, the multiple is crazy. And people are right to point out that the multiple is crazy because it is crazy. But if the market wants to continue holding on to this multiple and the earnings growth is all the market needs to see to keep giving them the multiple, if not expand it. And I think that part is in the bag. We'll get the earnings growth. It's just, will the macro be able to hold up even with that earnings growth? I mean, dude, seriously, think about it. 70 was our max pain. Really? I mean, like Tesla went from 480 to 215. Like more than a 50% decline. Palantir went from, yes, if you count 120 to 70, it's aggressive. But if you assume like realistically it was 95 to 70, because that 125 was like lasted for a couple days, right? To me, that wasn't that serious. Whereas Tesla was above 400 for a while, bro. It was there for a while before it started really cranking down. I mean, 71 was just not that bad. It really wasn't that bad. So now we're just going to see. Now we're just going to see if we can keep holding on to these levels. Speaking of Tesla, let's get into Tessie a little bit. So I guess here's another question for everyone. Let me update the poll. 260 right now in the pre-markets. On the first poll, 55% of you said you trust the screen, 45% no. Let's narrow it down now to, do you trust this Tesla bounce? Do you trust this Tesla bounce? Yes or no, baby? Do we trust Tessie at 260? I want to say yes, but my head says no because I don't think Q1's going to be good. The easy way to say yes, you trust this bounce is that, hey, even if Q1 sucks, Tesla will maybe come back to 220, 230. It's not going to come back all the way down to 200 because sentiment has bottomed and the stock literally is down 50% from 500 to 250. And so you're getting a discount, even if it is an overvalued company still. The discount is aggressive because of the velocity of price decline that it warrants a bit of a bounce, and it warrants kind of normalizing in the 220 to 240 range, even if we're not going to be at 270, 280 after earnings. I think that's a simple argument for why you could be bearish short term, but not so bearish to say it's going back below 200, which is theoretically like a bullish argument for this price action. The core bearish argument is just this thing is going to fall badly after Q1 when the numbers don't live up to the expectations, which, like, yeah, I feel like you can say that, but I also think that's too easy of an argument because, like, if everyone's thinking that's going to be the case, like, I don't know, does it really get as bad as what people think? Yeah, Benny says too many people are expecting sub 200. The bottom is in already. I don't know if the bottom is in already, but too many people are definitely expecting a lot lower. I mean, and theoretically, like if we don't hit 215 again, or we don't go below 200, yeah, the bottom is in. And, maybe it gets close to that again off of a decline, but maybe it doesn't necessarily go that much lower. What happened over the weekend was really interesting, though, and we'll see if it affects the broader price action. Garcia, good friend of the channel, he went viral on a post on Reddit, and he was trolling, but the trolling ended up getting millions of views. And he basically said, hey, on r/Elon Musk hate, which is a subreddit, I didn't know that existed, but it exists. He told people they can download a brokerage app, go to Tesla, buy a put, select June 20th, select $100, and then buy as many puts as you can. So he was basically saying, hey, this is how you short Tesla. You can buy deep puts for $100 for June 2025. Now, obviously, if Tesla doesn't have a dramatic decline, those people are going to lose all their premium because the put sellers are going to just be taking candy from a baby, right? It's just like, all right, if Tesla's not going to 100, then this is easy money. What would also be funny is if Tesla does collapse below 200 and these puts start printing for all these random people that are now getting into the stock market based on this post on Elon Musk hate. But this post went viral, like millions and millions of views. So I would be curious to see what the volume is on that $100 put. Let's take a look at it right now. And let's see what it looks like. I mean, it would be just hilarious if the volume on that is like thousands of people buying it today. So June 2025, $100 put. Currently right now, there's 23,000 of those open. That's interesting. Okay, so today we'll get some updated numbers and see if that gets even stronger. But yeah, there's a lot of those open right now. So definitely gonna have to watch the volume and open interest on this one. Yeah, Garcia fooled a lot of people. A lot of people thought it was a serious post. Garcia, he's a meme guy. He doesn't, he was just having fun with it. But people took it seriously. And I think there'll definitely be people that are going to be buying it today. And it's like, all right. First of all, if you buy a put from a freaking Reddit post, or buy anything from a Reddit post, like, you deserve to lose your money. Like, especially if you're new to the stock market. Like, I hate Elon so much. I'm going to take this random strategy that I never heard about called buying a put, and I'm going to, like, come on, bro. Like, if you lose your money there, you lose your money. But Garcia was having fun with it, and I think it's actually hilarious that if the hate is that high, the put volume increases. But I think it's also hilarious if Tesla collapses and then those people print money out. Like, that would just be wild. So either way, we're going to see how this plays out. But that was some of the Tesla updates we had over the weekend. Now, one other thing on Tesla right here, and we talked about this last night, Model Y inventories are significantly reducing their prices. This is what we're looking at in New Jersey, and it might be different in different states, but New Jersey has a lot of Tesla dealerships. You can get a new Model Y for 35 grand, which is crazy, bro. There's a $7,870 price adjustment. That's $8,000 they're taking off the core MSRP of the car, which is insane. So my dad is now seriously thinking of getting a Tesla. He's been thinking about it for a while. Now with these price reductions, I mean, this is a pretty juicy deal, in my opinion. If you were thinking of a Model Y, you guys can look in your own dealerships and in your locations. If you're in a different part of the country, you might not see these types of reductions, but a lot of this is an inventory clear out. Now, is this bearish because they need to hit their numbers and they're trying to get as many cars out there? Yeah. Is it bullish because they have so many Model Y Junipers that they're selling that they're just trying to get rid of all the old Model Y inventory? Yeah. I think it's kind of 50-50 on if it's necessarily super bullish or super bearish. But regardless, we'll get deliveries in a couple of weeks and we'll see how bad the numbers are. Most analysts are expecting just below 400,000, which would be declining year-over-year growth. But we're going to have to actually know if it's above 385, it's increasing because Q1 last year was 385. So if they hit more than 385, it's year-over-year positive growth from 2024 Q1 to 2025 Q1. If it's below 385, then it probably will be negative. Well, it's not 0% interest. It's maybe in some states, but in New Jersey, it's like regular 5-6% APR. 0% interest is only on the Model 3. The Model Y, they have not given out 0% APY. If they give out 0% APY and these $8,000 price adjustments, I feel like we would buy this thing tomorrow, bro. That's just like a deal you can't, in my opinion. If you want to buy Tesla, that's like, you don't get Teslas that cheap. So, but they're not doing 0% APY yet. If they do, then I think they are actually, if they have to reduce the car prices by $8,000 and then give you no interest for the financing, then I think there might be a demand problem. But if they do that, I think that would be a great opportunity to take advantage of. Yeah, right now it's still 6% APR. Okay, cool. So that's what we got in the context of Tesla. Yeah, the deal I'm looking at says cash, not financing. Obviously, if you finance it, you're gonna have to pay interest, right? So it comes out to like 41,000 instead. But still, not the worst price in the world, given sometimes these cars range up to 47, 50,000. And so a decent deal. And if you've got the cash, 35 grand, I mean, like it's cheaper than a lot of other models that are out there that aren't as good as a Tesla at the end of the day. Okay, let's hear from Deepwater's Gene Munster and get his thoughts on if stocks, particularly tech stocks, are bottoming right here and what he sees going into the final trading week of March.
Are any of these stocks not at tradable bottom levels, Gene, or you think they all are?
Well, I think that if you take the perspective of the next 2 weeks, April 2nd is going to be a vortex day. Not only we have the tariffs there, but we also get Tesla deliveries, which are widely anticipated to be.
I didn't know Tesla deliveries were coming out April 2nd. Wow. That's going to be a big day. All right. So we got tariffs and Tesla deliveries on April 2nd.
Down versus expectations. And so I think if you kind of put this mix together and think about April 2nd, I'm more in the brace mode of how the Mag 7 is going to react to that. Now, just put a finer point on it, the trees versus the forest here. On the tree side, we think about which companies are going to be most impacted by these tariffs. Of course, Tesla and Apple come up. And I think that those two companies, just because of politically where they're at, Tim Cook has done a marvelous job of navigating where Apple is at relative to these trades over the year. I think they're going to be in a great place. So I think that that piece should not concern investors. But the piece that should be of a concern is relative to how these tariffs impact a recession. I'm in the camp that we are still in position for a 2-year bull market that will end in a spectacular bubble bursting. But that whole view can be short-circuited by a recession. And so I think that's the other kind of the ripple here relative to April 2nd. So are we at a bottom right now? I don't think we're at a bottom. Do I think that these stocks will be higher at the end of the year? The answer is yes.
So I don't. You think you can be that fine in terms of resolution and not buy now, but buy before the end of the year? You would try that?
I think that's being cute. I think that that's hard to trade. But if you just want my expectations about how April 2nd plays out and what I think that the narrative is going to be, I think that that's more of a headwind. But still, very much in the camp that we're much earlier than people believe in the AI trade, and these companies are going to have a more substantial benefit than even the high expectations around that.
There's some controversy, I think, with one of your, I guess, another person in your industry that follows things, talking about Tesla. What's your view on Tesla, whether Elon Musk needs to, I'm not sure what this analyst was actually, I don't know what his advice to the company was. He said, Elon has started to, I don't know, to smooth things over, but he needs to do more. It's almost like saying that, the bully at the school, or the person being bullied, he's starting to do the right things to not be bullied anymore, but he needs to do more. And I thought it was very odd that, do you think that Musk is culpable for what's happening with Tesla? He should be doing something different, shouldn't be trying to find waste in the federal government?
No, I think what he's doing is he's doing what he believes is right for the federal government, and there's some fallout in terms of how that impacts the brand in the near term, and that could last for a year. I think that ultimately he's in the camp of doing what's best for Tesla longer term. At the town hall meeting, I spent the weekend going over, and it's a trap to spend my time looking at the exact details and trying to scrutinize everything he's saying in that town hall. What's most important is to look at the arc of the conversation. And that arc of the conversation is he talks about the next 6 to 12 months are difficult. That's the word, difficult to predict. And I think that's code for probably numbers are going down. But he also emphasized this shift in the company and their mission statement to sustained abundance. And basically, this is an AI robotics theme, the FSD optimist. And so do I think what he's doing today does it impact Tesla for the long term? No. And I would point out this just observation is that it's no surprise that Tesla is going to have a difficult March quarter. And yet the stock hangs in there. It trades at 80 times next year's earnings. And I think that is testimony to, I think, the kind of the resolution for Tesla owners, the stock owners, that they're okay with this near-term turmoil. So I'm in the camp that the stock can go lower near term, but the stock is telling us something different. The stock is saying they believe in what Elon's doing at the federal government. They believe in what he's doing for building this company around this sustained abundance theme. And robotics is as far out as that is. Investors are okay making that transition and owning this through a difficult period.
Now, some investors might be saying that about Tesla. Some investors, not all investors. Why? Well, take a look at this chart that came out from JP Morgan over the weekend. Retail investors have had their largest 13-day inflow into Tesla stock in the history of buying Tesla. $8 billion over the past 13 days. So basically $8 billion over the past 2 weeks, $4 billion every week. Largest inflow during any quote unquote buying streak in Tesla's history. A buying streak essentially is defined as a rebound from a perceived bottom. In this case, 215 was that bottom, as it continues to make new highs. So I think I think it's two worlds, right? It's either retail is calling a bottom, and that means that smart money has been stupid for selling off Tesla over the past month, or retail's buying into a lot of strength that is fundamentally algorithmically more manipulated, and that strength's going to get dumped on them either after earnings, after deliveries, whatever it may be, but it's going to be one or the other. It's either retail is officially called the bottom and they are leading the movement higher, or smart money is going to find a way to get this to dump really badly. I don't know. But so far it seems kind of obvious that retail has said 215 is enough of pain, and we're not going to necessarily let it go that much worse. What did you guys say on the poll? We got the market open in 3 minutes. 60% of you do not trust this Tesla bounce. See, I think a lot of people are still skeptical. A lot of people are still skeptical on this. And I think it's a healthy form of skepticism, given the pain that we've been going through over the past couple of weeks. And it's skepticism that is, probably skepticism you need to survive in markets. But it's also like sometimes that skepticism makes you end up missing the run. And it's just, I think everyone's trying to figure out what is the logic for the run on Tesla. And from a company perspective, I don't think there is any logic, realistically. I mean, there's not robotaxis yet. We know the March quarter is going to suck, and Optimus is not happening yet. So where do you get the necessity to pay the type of premium? Because they're not even growing, right? They're growing negative 9%. You're like, there is no growth. It's a growth company that doesn't have growth outside of the perceived qualitative understanding of growth in the future that will be so magnificent that it will make Tesla the most valuable company on the planet times 10, which has got to be the core long thesis on Tesla if you're buying here. And it's just a question of if that qualitative story is enough to maintain the multiple. Yeah, insiders are selling. I don't know. I don't put too much faith into the insider selling stuff. Like, I've seen a lot of these screenshots of insider selling. I've seen a lot of the screenshots of the Palantir insiders. It's like, it's just not that serious, dude. Like, at the end of the day, this stock is not going to go up or down because some board director sold 1 million shares. Same thing with Palantir, same thing with Hood, same thing with NVIDIA. Like, it's going to go up or down based on if the market wants to pay a premium for the growth. Like, now, if they're selling because they know that the quarter is going to suck or that the growth has completely gone away, then you can make the argument. But people are saying they're just selling and therefore that's bad. It's like, we've seen this time and time again. Insiders sell and stocks go up because earnings growth is what the market cares about, not an insider buying a beach house in Nantucket. You guys are surprised I know what Nantucket is, right? It's a little cultural knowledge. You know what I'm talking about? I think it's in Connecticut. I think. Is it in Nantucket's in Connecticut, right? I don't know how that even came to my brain right. Nantucket. No, it's in Massachusetts. Wow, it's in Massachusetts. But it is a beach place. Like, people buy beach house. It's a tiny isolated island. Okay, there you go. I messed up on Connecticut, but at least I got the name of it right. I'm surprised that you can announce it. Massachusetts. It was in Massachusetts. By the way, I got roasted last night for commenting on their Farzad's post that medium well was the right way to make steak. It was like hundreds of comments just destroying me, but I stick by what I said. All right, 9:30 Monday, March 24th. We got some green, baby. The stock market is now open. Wake your ass up. That was a nice bell. It was one of those bells we haven't got in a long time because we got some green. Hopefully we can hold it. Robinhood opens up 4% of the day. NVIDIA opens up 1.9% of the day. The S&P 500 has reclaimed the 200-day moving average. You should go up to everyone in your life that doesn't care about the stock market, and you should text them today. Or if you're at work, you should go up to them and be like, hey, did you know the S&P 500 reclaimed the 200-day moving average? And just see what they say. And if they have a look of bewilderment, that's because they're not in the markets, but you are, and you go through all this pain for one day, the S&P to reclaim the 200-day moving average. The MicroStrategy is up 3%. PayPal's up 2%. Bitfarms is up 3%. Marathon is up 4%. Coinbase is up 4%. Bitcoin, 87.3. SoFi, 13.26. That's up 3%. GameStop, 2%. Reddit, 5%. Warner Brothers Discovery, we were talking about this one on Friday. That's up 2%. HIMS is up 2%. Block is up 2.63%. Google, back to 166. Amazon, 2.6. Back over 200 for Amazon. Bottomed at around 189, now at 200. Carnival Cruise, great earnings on Friday. That's up 3%. Meta, 613. This thing got to 575. Now we're at 614. Celsius, 33.68. That's up 2.6%. The Qs, 487, trying to make your way back to 490. You got Apple, that is up at 219, just under 220. Even the quantum names are up 5% today. IONQ as well up 5%. Rigetti's up 3% after getting hit last week. Robinhood right here, 46.45. Palantir, 93.39. And then Tesla, $259. on the day. Rocket Lab, 1978, trying to make its way back to 20. NVIDIA, 120 right here. S&P, again, 570.3. MSTR at 314. You've got pretty much everything getting a bid. Dollar General's down a little bit. TLT's down because bond yields are up. Grab is down just slightly on the day. NEO's down 1%. Verizon's down. AT&T is down. Berkshire Hathaway should be up with the market. Berkshire Hathaway is up about 0.2% with the market. Tesla 260, up a good 5% on the day. Celsius is up 3%. Robinhood 46.35. SMCI, that downgrade is getting them hit right now, down about 2.4%. Palantir as well, trying to make its way back to 94. It did touch 94 last night. And now Tesla's looking like it's about to hit 261. Actually, it did hit 261 for a second. Then it got rejected right there. Now it's back at 260.30 here right now. Rocket Lab back to 20. There you go. Rocket Lab back to 20, up 5.7. Oh my, this is some green. This is some green. AMD 110. Wow, AMD was stuck at 100. Realistically for the past 2 weeks. What else? Duolingo's up 4%. So you're seeing some of these growth names get some love. That one's up 2.69%. Palantir 93.46. Tesla 261. Oh my goodness. It's going for 262. Oh, there's 262. There it is. I didn't even have time to check resistance. I think it's going for 263. Let's pull up the Tesla bid and ask at 263. I'm looking at 10,900 shares. It's not a lot. There's not really any resistance. The next major resistance for Tesla is 265. You got about 50,000 shares sitting there. 263 and 264 don't really have much resistance if it can crack above it. 261.77 on Tessie. Robinhood above 47. Wow, dude. This is a green day. Got rejected at 47.18, right back to 46.90, but still, that's a green day. NVIDIA about to make it 121. 120.65 right here. MSTR freaking 320. And that, part of Robinhood's rise right now is probably because of Bitcoin, up from 82 to 87 over the past couple of days. So that's helping. Reddit as well, up 5%. Rivian's up 3%. GameStop is up 3%. Tempest AI is up 8%. Google up another 1%. Meta's up 3%. Again, 570 to 615 has been the swing. And then the S&P 500 has reclaimed the 200-day moving average. It's a big deal, dude. This is very similar to November 2023, where we lost the moving average, or the 200-day. And I think that was about 7 to 8 days it took to reclaim it. And then we went on to have an epic 2024. Let's see. Does history repeat itself here? Could we lose it for a week and then regain it and have a V shape? A bit skeptical given all the headlines, tariffs, bond yields. There's a lot more stuff happening this time around, but maybe there's a shot. Coinbase right here up 3.36. FedEx is up 3%. SoFi is up 3.38. Struggling to find the red. We're seeing a ton of momentum everywhere. Rocket Lab as well. Yeah, 7% on the day is incredible. Now it's 5.78%, $20 right there. So you are getting some red candles. Rocket Lab was at 20.39. Now it's at 20. Robinhood was at 47.18. Now it's at 46.93. You are seeing some red candles, but they're not taking away the bulk of the move. Tesla right there, 262.4 right now. Netflix is red. Interesting. Netflix is red, and HIMS is up 1.9. Netflix is red. That's down about 0.2. Grab is red as well. That one a bit confusing. I would imagine that one pumps up a little bit. Oh, there was a dark pool order for Grab of about how much? It was 11 million shares or something. Maybe that was a buy. Maybe that was a sell. I'm leaning towards more of it was a buy. We'll see over the next coming days how the price action works to kind of conclude if it was buy or sell. But that was on Friday or Thursday. There's a pretty aggressive dark pool order on Grab. So we'll see how that one turns out. But at least we're up from $4 to $4.60. I think, again, fair value is closer to $5.50 right now, but it's up to the market to determine that. Again, the rumors about Grab buying out GoTo as well. I think those are another thing that's kind of keeping the stock in a certain position. Like the market doesn't know what to do with those rumors, but I would imagine by the end of Q1 earnings, we should get a deeper understanding of if that acquisition is going to happen. Tesla right here wants 263. It is 10 cents away from 263. It's getting hit right at 262.95, got rejected at that level, but it looks like it wants to try to get back to 263. And then obviously some of the algos are affecting these stocks, like a Grab, like a Netflix. I mean, they should be moving with the market. They're not. So you do have different pockets of algorithms affecting. Archer's up 4%. All the quantum stocks, again, up 9%. Rigetti's up 6%. IONQ's up 11%. DWA's up 9%. And QUBT is up 9%. So speculative stocks are getting a bid. Soundhound as well. That's up 5.3. But Tesla really is the story right here. 262.85. Trying to find a way to 263. What else do we see? MicroStrategy is getting some love. Yeah, Tesla. Oh, wow. We hit 263. There you go. There it is. There it is. That was quick. That was a quick rejection off 262.95. Took about 30 seconds. Right back to 263. And that makes sense. There's no resistance there. 265, there's resistance. Even at 264, that shouldn't be really hard now that momentum's on the side of Tesla. This is a hell of a run, though, bro. 215 to 260. I mean, this is a hell of a run. And even if, let's just say Tesla gets to like 270 or something before earnings. If Q1 sucks and it goes from 270 to 220, that's better from 220 to like 180, right? So, I mean, like if there is some room for it to fall and for it to not be that painful if it keeps going higher, versus if it was stuck at 52-week lows and then it went lower, that would just be really aggressive. Maybe that all hands meeting as well kind of inspired a lot of retail. You know, you can't discount the fact that Elon telling you that Tesla will again be one of the most important and largest companies on the planet based on robots, FSD, etc. You had a lot of retail watching that saying, you know what, screw it. I might just buy some Tesla. That might be what's happening right here. Robinhood 47.18, baby, up 6.3%. Robinhood getting a decent chunk of momentum right here. Wow, S&P, we are now above the 200-day moving average. Not bad at all. 1.4%. That's a hell of a gain on the S&P, dude. If we end the day anywhere near 2% on the day, that is a green day for the S&P, moving multiple percentage points right here. Palantir 93.15 as well, holding 93. Amit, is this a trap? Like Derek said last week, once we hit the next quarter earnings, it might fall more. You know, no one knows. That's the hard part about investing. Like, I don't know. Do you guys think all of this green is a trap? I think the reason we're moving, for those that just joined, is because of the tariff headlines we got last night from the Wall Street Journal, basically saying that Trump is not going to be implementing 25% across the board on autos, semis, and pharmaceuticals, which basically to me signaled to the market that, oh, he's going to be really flexible, which he said himself he was going to be flexible on Friday. And that's what got the market moving towards the direction of, hey, tariffs are not going to be that bad. And that's why we're green right now. If something changes, and tariffs do end up getting that bad, then yeah, I think this is a trap, because you know maybe Trump and the Trump administration is going to unveil even new policies that take us down further. We experienced that for the past couple of weeks. But if they don't, I mean, earnings growth is not bad. So if earnings growth is going to live up to the multiples that have already been compressed, you're not asking for Nvidia to justify 150. You're asking them to justify 120. And maybe they pump up to 130 before earnings. I think Nvidia is going to more than justify $130 a share. So if they can do that, and we don't have a recession, and we don't have tariffs like straining the confidence of the equity markets, it feels less like a trap. It feels like it should be moving the way it's moving right now. Versus a pure on dead cat bounce. I mean, again, we've showed this chart many times, but seasonally, we are on track. This is what's supposed to happen seasonally. And as you can see, we bottom in March, which so far we have bottomed in March. And then in April, it's a nice green Easter going into May, June, July, and then August, we top out a little bit. We fall September, October. Then we have a Santa Claus rally November, December. That is the playbook for how 2025 on a post-election year theoretically should play out. And if that's what we see, then yeah, stock should be going higher. And again, SoFi at 1340 is stupid. SoFi should not be. SoFi should be closer to 15, 16 bucks, dude. It like when it was at $10, that was also stupid. And I think everyone knew it was stupid at 1065. Like every Robinhood at 32, everyone knew that was stupid. So to me, also, it feels less like a trap because, and maybe SoFi doesn't have to literally stay at this price, but it does mean that those levels got so oversold, and you had many indicators to explain why it was oversold outside of just the company's growth multiples at those prices. Fear and greed being one of them. We are now still in extreme fear at 23, not 15, but we're still in extreme fear. All of that put together could justify a decent level of bottoming out, even if we don't have to go up 20% from these levels. But yeah, we still have to figure out what the Trump administration does on April 2nd, and I guess that'll define if it's a trap or not. SMCI is red because they got downgraded by Goldman Sachs. That's why they're red. But they're the only semis that's red today. Bitcoin still above Robinhood. Wow, 47.40. Holy crap. All right, so Hood's moving. Bitcoin 87.4. Grab is about 2 cents from going green. AMD's at 109. Duolingo 320. S&P again 1.4. Tessie 262. It hit 263.70 and then it got hit. Holding on right there to 263 right here, and then Palantir 93.30. NVIDIA just below 120. I mean, I know it's only been 15 minutes. I guess 10:30 we'll see if there's a real slam, but the typical 15, 20, 30-minute slam after the market opens, not happening today. Not yet. The 10-year is green, which is not good, but it is green. 4.296, slightly green, nothing crazy. It's just up a little bit. But that's not necessarily going down the right way. And people might be selling it off to buy markets or to buy stocks right now. You'd be proud of it. I got in at 36 for Hood. Congrats. That's amazing. I mean, again, a lot of those, they were there are good opportunities in hindsight now. At the moment, you have to have some balls to be like, all right, I'm getting in to whatever stock you got into. I think about 2 weeks ago when everything was hitting the fan. But yeah, this is the beauty of buying the dip, is that sometimes these equity prices do get stupid and we get a rebound. It's just a question now if we can trust this. And I think everyone is jaded because no one officially knows, but hopefully in the coming days, we can prove this is the right trend. It would just be so much more awesome every day if we're green, you know, every day if we're green, like if we're green every day, like again, life just gets better, dude. It's like you would be going through a ton of shit in life, right? Like the average human being is going through a ton of shit in their personal life, their work life, professional, personal, all that stuff, right? But if you're invested in the stock market, you could have all that same shit and then take a look at your portfolio every day and know that at least one thing in life is going in the right direction. Like that's the cool thing about being an investor, right? Like you could have all the shit you have to deal with, but one thing in life that really you don't have any control over, it's just your capital being allocated, is going in the right direction. But that's only for green. If we're red, then it's like, oh, I got all this shit to deal with and I'm losing my net worth. Like then everything sucks. But you go through that pain for the days where even if everything sucks, at least your portfolio is green. And that makes things a little better. 560, wow, 571. We were at 1.45% on the S&P. That is very close to 1.5. And if we break that, we might be going for a 2% day, which would be epic. A 2% day on the S&P would be epic. What? Palantir 94? Are we there? Are we there? Wow, there you go. Palantir 94. I was saying this last night. If Palantir gets back to 100, dude, if Palantir gets back to 100 after all this shit, it's going to feel even better than when we hit 100 for the first time. Because we hit 100 so it just happened so quick, right? Like you didn't even have time to savor in the moment from 83 to like 97, because within 3 minutes of Karp starting his monologue on the earnings, we just bumped up to 100 and then boom, it was there. And so I think if we get there again, it's going to be sweet. We got to see. We got to see if we can get there. Let's see. Did we hit 264 on Tesla? Hold on. Did we? Oh, wow. There you go. 264 on Tessie. There she is. She hit 264.67. So now 265 is going to be a little tougher. The resistance is, about 80,000 shares. It's not insane. It's not like 500,000 shares or anything. It is possible, but it should be a little tougher to break through 265. Dude, this is green. This is green, green, green. This is a nice set of green that we haven't seen in a while. Where's Uber? Bill Ackman tweeted on Wednesday or Friday to buy Uber. He literally tweeted under someone's post. He was like, hey, you should buy some Uber. I was just like, I didn't know fund managers can just say that stuff, but I guess they can. Uber right here up 1.86%. Definitely outperforming Tessie. But you know what's going to be really interesting? In the next 10 years, right? If Bill Ackman doesn't own Tesla or any of these major super investors outside of Ron Barron don't own Tesla because of whatever they were concerned about when it came to Tesla, right? There's a trillion things to be concerned about, but they own like an Uber, you know, or like a Google for Waymo. And then just imagine Tesla really does become what Elon said it would become. Wow, 265, baby. That's like that. Well, that didn't take. I think we got to ring the bell for that one. 265 on Tessie. Looks like 80,000 shares wasn't an issue. There you go. My point is, if Elon is right and it actually 10 years from now does become $7-8 trillion company, I know that's insane, but like for the thought experiment, let's assume, and none of these super investors are allocated towards it because they just didn't like the price or to earnings ratio or something in 2025. It would just be so interesting, dude. It would be so interesting to see how that plays out. Because Ron Barron and Cathie Wood would be the only two really big names that publicly were advocating for it and own it. And you would think, you know, like this is the technological revolution. You own the name that's going to be the most relevant in the future. But some of these big guys just might not have exposure to it. So it really might be a retail fueled wealth creation effect where the majority of retail owns the name. And then over the next 10 years, if Elon's right about everything, retail gets filthy rich over the long term. Palantir hit 95. Did we hit 95 on Palantir? Holy freaking crap. I think we got to ring the bell for 90, but we got to ring the bell for 95 as well. Wow, we haven't had bell ringing in so long. For these good moments. Did Tesla just hit 260? No fucking way. Did it just? Goodness gracious, 266 on Tessie. I think, okay, either big money's chasing or algorithms are pumping it to dump on retail. Something's happening because there's no fundamental reason for it to go up 7%. But then again, it's Tesla, right? Like, I mean, there's never a fundamental reason for anything. So Robinhood as well, trying to push 48. NVIDIA's trying to get back to holding 120. Coinbase is up 3%. Bitcoin 87.5, maybe getting closer to 88. SoFi's at 1340. Rocket Lab is 20.25. That's up 7%. And the S&P just crossed 1.5% for the day. If you get a 2% day on the S&P, a lot of these names are going higher, at least today. We'll see if it can hold tomorrow. But 2% day on the S&P is taking a lot of stocks higher. It's definitely taking a lot of stocks higher. Could it be a Tesla short squeeze? The short percentage has rose on Tesla. I don't know if it's rose enough to the point where it gets squeezed out, like a 2018, 2019 type of thing. But yeah, I think there could be some pressure on the shorts just deciding to cover because they're scared now. Definitely today's price action is not making them feel, I would think, comfortable with their short. Palantir 95.20, but I don't know if it's a full-on short squeeze. I think Tesla hit 267. Yeah, it hit 267. It got rejected at 267.23, but it did hit 267. Do we have PMI data today? Hold on, let me check. I think it's at 10 a.m. Oh, no, it just came out. Oh, we just got PMI. Okay, we just got it. PMI data, that could be another reason the market's up. PMI data just now came in at, yeah, it's a beat. 53.6 versus 53.5 versus 51.6. Manufacturing came in at 49.8 versus 51. That's a little bit lower. And then services came in at 54 versus 50. So you got a nice fresh print on PMI, which is a manufacturing and service index for expanding or contraction in the economy. Two of those beat, one of those missed. The one that missed was a very slight miss. Seems like the market could be reacting to that as well. And that's why we're getting some green right here. Yeah, those are good numbers, dude. 53.5 versus 51, 49 versus 51, and then 54 versus 50. Services continuing to do well. The 10-year is moving up. The 10-year now 4.3. This part is not the easiest to navigate with stocks going up, but that is green. Tesla Q1 earnings is still a thing. That is correct. But again, if Tesla's at like 280 or something before earnings, and then it drops, and it drops to 230, everyone calling for below 200, it's just not going to happen. You're just going to have way too many people buy that dip if it actually gets there. So, I mean, if anything, for Tesla shareholders, this should be one of the greatest things ever, because even if you're expecting a crappy Q1, maybe the velocity of the decline is not going to be as bad, given it's pumping to a brand new level. Palantir is going for 96. Let me check resistance at 96. Dude, when Palantir goes on this type of a run, it tends to hit some milestones. Maybe $100 is staring at us on the horizon. 96 has 39,000 shares. 39,000 shares for 96. VST, you got some momentum there. The data center plays getting some green. That's up 5%. Again, SMCI is down. S&P is up 1.5. It is reclaimed the 200-day moving average. Hood about 10 cents away from 48 on the day. MicroStrategy is up 5, and then NVIDIA not really getting to hold 120, but NVIDIA is the one. NVIDIA is like the laggard. It's hilarious. Everything's mooning, but NVIDIA can't break 120. I mean, it feels like it's an NVIDIA-specific issue the market has with this trade, but they're not letting it pump as much as the others. SoFi right here at 1340, that's up 4.1% as well. Over 1,000 volume on the 100 Tesla puts for June. That's hilarious, bro. So you've got 1,000 people already potentially buying, or you might have people, selling those puts to people. But those $100 puts that went viral on Reddit, we are seeing some volume on those names now. All right, let's do a year to date. How much are you up year to date? What do we have in the chat? You can put your percentage. Are we at 48 on hoodie? We touched 48. There you go. 48.03 on hoodie. Got rejected right at 48.03, but we did indeed touch 48. I'm looking at my year to date. It is now positive 4.65%. We went positive on the day. I would imagine a ton of you are going positive. And if you're negative, you're probably not as negative as we were on March 11th. March 10th was the bottom. I'm looking at the chart right now. March 10th. That's the day I was down $110,000.31. But since then, yeah, we've had some decent recovery. Yeah, Melanie's up 4%, TJ's up 3%. A bunch of you guys still negative, but the negative is not -10. It's like -2, -3. Some of you guys are flat. Wong's up 30% year to date. That's incredible. Dylan's up 21%. Spicy Noodles only down 3%. JK's up 4.5%. Heman's up 10%. Sanjay's up 6%. I mean, dude, to go up to get green on the year to date after all that red, that's a win. That is definitely a win. S&P now well above 1.5% for the day. That's a hell of a day, dude. That's the market. That's, to me, the market saying we think we've bottomed. Have we? I don't know. But the market's ignoring any red flags that are out there and saying we are going higher. Now, again, it's one day, and it's only 25 minutes in that one day. So we got a lot more time to see this realistically play out, but it's a pretty strong move, dude. For this to reverse today, you would need to see either a headline or just algos like fully done. Like there would have to be something that really reverses almost 2% on the S&P. Even Netflix went green. Grab just went green. A lot of those laggards are now going green, picking up with the market. Tesla trying to go for 268. Palantir trying to go for 96. Got rejected at 95.98. 2 cents away. 2 cents away from touching 96 again. Even if there's bad news on April 2nd, could there be less uncertainty, which could be bullish for the market? Yes. And I think that's what the market's betting on right now, especially with that Wall Street Journal headline yesterday. But the question is going to be how much lack of uncertainty compared to the lack of tariffs is the market going to have to deal with. And again, the reason I'm still a little skeptical is because the White House wants bond yields to come down. That's not what's happening when stocks go up. So I don't know how they're going to get those yields to come down, but that's what they have to. They've been very explicit about that. Do you need stocks to fall in order to get those to come down? One, a traditional economist would say, yeah, it's really hard to do it without that. But maybe there's a way. I mean, J-Pow's not cutting. So bond yields are not going to come down because of J-Pow cutting, because with this type of a market, J-Pow's going to wait probably until June at the earliest. So I don't know, like, what is the White House going to do? And if the White House is going to cause more volatility, then this is going to be a dead cat bounce, essentially. But I don't think anyone necessarily knows exactly what their argument is going to be. Doug says Trump has to say something today to crush this rally. The 10-year has to go down. Yeah, I mean, again, that's like a thesis that I think a lot of us have, but who knows if that thesis even plays out anymore. But from everything we've heard from Besant and Lutnick, it's like they want those mortgage rates and those bond yields to come down. They don't care about stocks. In fact, they've explicitly said to not worry about the short term on stocks. Which the only reason I'm bringing it up, as much as I love the green, is like, the past couple of weeks has kind of toughened you up a little bit, and we have to get ready for these violent declines if we see them, based on some random Trump headline. Hims is up 4.2, Duolingo's up 4.6, Robinhood 48.13. We do have the Robinhood event this week. It's going to be a really important event. We're going to see the new products that Robinhood unveils and what that means for the overall business. 95 million contracts for the sports betting have been traded officially. There's a great account on Twitter that I'll link right here, Joshua, that tracks all the volumes. And so far, 95 million in the first couple rounds of the NCAA tournament have been traded. So that's about 1.9 million of revenue for Hood, which is pretty incredible, dude. 2 million in a week. I mean, like, if they can do that every week, maybe not 2 million every week, but maybe an extra 500,000 or something, that's going to be something producing 20 million a year in revenue. And there you go. That's how you pay for all these incentive matches. They're doing 2 to 3% brokerage transfers, crypto transfers, like that easily pays for all those matches and retains their profitability. So there's a lot of operating leverage that it seems like Robinhood can have on this product. Robinhood right here, 47.97. We got a headline right here. Trump is going to be holding another cabinet meeting with Musk today. Okay. So we will be getting Trump. Musk was at the first cabinet meeting. NBC is reporting Trump will hold another cabinet meeting with Elon Musk today. There were some reports from that first cabinet meeting that Trump and Elon and Rubio got into a little bit of a kerfuffle. Trump kind of played it down, said it wasn't that big of a deal. I don't know if this one will be recorded. The last one was recorded for like the first, 20 minutes. But it looks like we'll be having another cabinet meeting today. Now, if they say anything in that cabinet meeting that is a little aggressive for stocks, that could be something to watch out for. Palantir, we did hit 96.12 very quickly, and then we got rejected. Now we're back in 95.5, but we did get there. Grab is up about 1/3%. Netflix 965, Hims 36, Uber 77, and then Robinhood still holding 48. Still holding 48. What else? What other headlines do we have? Let's see some headlines. What do we have going on? So we got the cabinet headline. That was a big one. Nothing about tariffs yet today. We looked at PMI. That was green. That was good. That could be helping the markets. We talked about the South Korean headline as well. $20 billion getting investments in the United States. That was good. I mean, we had a lot of good news today. I'm not seeing crazy bad news. CrowdStrike launched an AI-powered network vulnerability scanning platform. Let's look at CrowdStrike. They are up 1.1% as well. Nothing too crazy there. And then the S&P still up 1.5%. Tesla 269. Holy crap, dude. Take 2 seconds off of Tesla. Goodness gracious, bro. 269. Well, let's see where 270 is. Dude, could you imagine this thing runs 300 before earnings? Holy freaking crap. 269 or 270 resistance is 45,000 shares. 45,000. Again, not that bad. 45,000 is, in the context of Tesla, not an aggressive wall. Wow, dude. Aggressive. Archer, are we up on Archer today? Archer is Yeah, that's up 5% as well. So a lot of the speculative names participating in some of this green. GameStop as well, up 2.5%. And Meta right here at 619, back up from 578. It makes sense for the Mag 7 to be getting their momentum because these are really good companies and they deserve, to get multiple expansion. But I think everyone is just afraid of if they get hit in any aggressive way because of Trump, which is what happened over the past couple of weeks. Like Google at 167 is stupid in my opinion, but the market might still continue to feel there's volatility of an overhang. The other reason I think is because obviously we saw a rotation from the Mag 7. Now, if the rotation wants to come back into the Mag 7, I wouldn't complain about that. I wonder if the market's willing to do that. Look at the heat map today. Everything green. Everything. United Healthcare is red and Merck is red. Almost everything else is pretty much green. And even the names that shouldn't be that green, like a Verizon or a AT&T, they're not even red. They're flat. So I thought the market rotation out of the Mag 7 was always stupid. Now, I've been wrong the whole past 3 months this year. I didn't think the rotation would happen. It's funny. I thought the rotation would stay. I thought that the rich would get richer. And that didn't happen at all for the Mag 7. The fat got a little skinny. And other parts of the market started moving, but not moving enough to pull the S&P 500 to new all-time highs. Because I think it's kind of hard for the S&P 493 to get us to like 6,300. You kind of need the Mag 7 to participate, which is why we saw the 10% downside. But if money wants to flow back to the Mag 7, I don't think you can blame them. These are the best companies in the world. Let's get an update from CNBC, see what other headlines we got going on, and then we'll get back into this price action and see if we can maintain some of this green momentum.
Forecasts a rotation back into equities led by the Mag 7, thanks to weaker dollar and stabilizing earnings estimates for the group. Auto stocks are also getting a boost from reports that the tariffs scheduled for April 2nd could exclude autos. Separately, Hyundai also announcing a $20 billion investment in the U.S. News first broken here on CNBC. We'll get to in a moment. And then a similar story for steel stocks, rallying as UBS upgrades Steel Dynamics and Nucor to buy from neutral. As they say, tariff protection for U.S. steel and aluminum has exceeded expectations and caused a significant rally in commodity prices that the companies can capitalize on. So it's all about tariffs. That's the front and center story today. And David, the thing is, we don't know that much yet. And there's still uncertainty, but this time it feels like it's better uncertainty because the word is they're more targeted, they're more narrow, they're not blanketed. They might have exclusions for certain key industries.
Right. I mean, Scott Besson continues to use, or at least they continue to reiterate his words about the 15, I think did he say dirtiest or
15%?
No, the 15 countries that are the dirtiest of the group, being front and center.
Is that referring to our deficits, our trade deficits?
Exactly.
Yeah.
Bitcoin is moving, folks. 88 on Bitcoin. Wow. That is an aggressive move right here. That's a hell of a candle. We were just looking at 87.5. Oh my, that's green, baby. Oh, we forgot. I forgot to even mention Saylor bought 6,000 Bitcoin this morning. So, I mean, that's probably one of the reasons. MicroStrategy has acquired 6,911 Bitcoin for $584 million at 84,529 a coin. So, yeah, there you go. That could be explaining some of the Bitcoin love. Did we hit 270 on Tesla? Did we hit it? No, didn't hit it yet. 269.71. Did not hit 270 yet. 269.71. Got very close, but did not hit 270 yet. Shout out to Tim Waltz from Farzad. That dude, he called the freaking bottom. Tim freaking Waltz. Who would have thought this guy who has never worked in the private sector in his life knew how to download an app on his phone around the stock market and then was able to clearly show to everyone that Tesla was bottoming, even though he was dancing on Elon's perceived grave. It ended up being a very nice bottom. Hopefully, in the short term, it seems like this is bottomed, up 7.8% of the day, 268 on Tesla. Wow. Like, in all seriousness, like, again, the market, we don't know if it literally had bottomed, but the market 10% correction is like you tend to get a little bit of a rebound. So even him being like 225 and going down, that was when the S&P was down 10%. That was just the worst time to do that, because it's like, well, theoretically, if the S&P bounces, a lot of stocks will bounce too, and Tesla will do as well. Farzad says, see you in a bit, even though you ignore my calls. Okay, so hold on. I'm doing a podcast with Farzad today. It'll be like our monthly podcast that'll be on his channel probably tomorrow. I get a call from Texas over the weekend. And this was when I was doing the Jason stream, the option stream. And I'm like, who the hell's calling me from Texas? So I don't pick up the call, and I'm like, who the hell is this? And Farzad's like, it's me, bitch. And I'm like, oh, I'm sorry, Farzad. I didn't have your number, dude. We usually talk on Twitter. We usually don't text. So yeah, I've now saved his number in my phone. Farzad, I'm gonna save you as the medium well steak guy. The medium well steak guy. Because maybe that'll influence you to stop cooking this pink nonsense that you cooked last night. I'm sorry, I got to call you out publicly, dude. But look at this. Anyone who thinks this is cooked, I mean, I've got a bridge to sell you. I mean, like what? What? Look at all this pink. Look at all this pink, dude. Are you kidding me? Medium well is the way to eat steak. And Farzad's bled into the propaganda. This is the steak I had yesterday at Texas Roadhouse, okay? This is the steak I had. Look at this beauty. Look at this shit. You see any pink in here? No. Because it's cooked. It's actually cooked. Okay? I texted this to Steve and he said, well, at least the fries look good. The steak looks good as well. Okay? It's cooked. I don't know what to tell you guys. I really don't. And I'm not even doing this to troll. I ordered that medium well yesterday. I enjoyed it. I loved it. Had medium rare. It's not the it's not the right way to cook a steak. The only thing cooked is you. Oh my God. Farzad, we're gonna have to debate about this, dude. We're gonna have to. All right, let's get back to the updates. But it's medium well, dude. It's medium well. That's how you do it.
Exactly, and therefore getting recompense, so to speak, in terms of our tariff policy versus them, but not having quite as broad. And although exclusion's still not really being discussed, I guess, even though many have come to the president asking for them.
Lobbying. Yeah, we don't know at this point. I think there's a lot that we still need to find out. And it's a hard job. I mean, millions of tariffs exist on products that, go back and forth. So it's unclear how broad that's going to be. But I think bigger question for the market right now is what's going on with the economy? There's definitely some softness, but how soft is it? Is all the recession talk warranted? That's what I'm focused on. Some street notes this weekend to pay attention to. Morgan Stanley's Seth Carpenter. The real slowdown, he says, has yet to show up in the hard data. It's really in the confidence. That's the soft data. Our equity strategists also caution about further risk to earnings downgrades. We think there's more bad news to come for the U.S. economy as substantial shifts in policy wend their way through the economy. Barclays with a sort of similar note, amid intensifying uncertainty around both legs of the mandate, Powell struck a more positive tone, resurrecting the transitory narrative for tariff-related price pressures and dismissing potential warning signs from inflation expectations and surveys. For now, hard data points to slowing, not weakness. So everyone's trying to make sense of what's coming in the economy. We'll get some more clues.
We got Jeremy Siegel. Let's see what he has to say about some of this market momentum right now. And then we'll keep going from there. But again, a lot of these sell-side analysts saying, hey, don't ignore the fact that inflation, tariffs, this stuff still matters. And we can't just act like the green takes away from that volatility.
Joins us now. Always good to have you, Jeremy. And you heard Sarah and I talking, I would assume, about sort of the broader economy. Just give me your take in terms of the market and that economy.
I think Sarah has it exactly right. I mean, the narrowing of tariffs talk is the major reason why we got this rally, I think, today and toward the end of last week. And the market does not like uncertain, wildly fluctuating, and potentially very high tariffs. It is willing to look towards the targeted tariffs, and that might actually be beneficial. So it has its fingers crossed for April 2nd Trump calls it Liberation Day, but I think for the market, they're looking for Relief Day, hopefully. And hopefully we don't get a bad surprise. But also it is true, we're not really seeing a lot of hard data that shows a slowing economy. I mean, we got these PMIs just a few minutes ago that were a little weak on manufacturing, surprisingly strong on services. Jobless claims are back in that sweet spot of 220,000, which doesn't show a weakening. It's the surveys. And I think that's the big question is, you know, that big drop in surveys, and we get another survey this week, actually tomorrow, the conference board. Is that survey really going to lead to a downshift of consumer spending? Because I think a lot of the talk of that tariff did scare consumers, and you know, higher prices. What does that mean? We're getting feedback from home builders, some of which I've already said, oh, you're going to charge 20% more for this and that, and that's a negative. And so, if we can quiet some of those fears, that certainly will be positive.
David Rosenberg weighing in. Retail sales is also hard data, and that reflected a weaker consumer spending environment. But to that point, Professor Siegel, that's where I was trying to figure out where the consumer is going. If the uncertainty really is impacting consumers' behavior and their psyches, should we be bracing for weaker consumer spending and a weaker economy? And is that what the market is trying to tell us?
Well, I think part of the market decline is that uncertainty. Now, if on April 2nd, you know, we get news that it isn't so bad, it isn't going to cause big increases, that might calm the consumer. I mean, there's two sources of, I think, consumer fear. The major source is certainly tariffs and higher prices. There's also concern about layoffs. I mean, certainly in the federal area, and could it spread? There's almost nothing that could kill spending more than the fear of losing your job, either because of a tariff-induced recession or slowdown, or a direct cut by your company, or particularly the federal governments. You will not make large purchases. So that's the big question mark. And, you know, maybe if April 2nd, and if the press pitches it as, you know, hey, this isn't so bad, we're going to negotiate some of their tariffs down on us, we're going to get bigger demand, and it's not going to have a big impact, we could see a turnaround in those fears that the consumer has.
And this is basically what the Wall Street Journal reported yesterday, right? Which is that the tariffs are not going to be that bad. And that's why equities, I think, are reacting positively to this news today. Let's get one of our own analysts on the show and get his perspective on the bright green that we're seeing today. Kris, good morning.
How dare you eat the cow? I don't understand, beta. You're not supposed to eat the cow. I am so disappointed in you. Ganesh is pissed. No more eating the cow. All right, let's go back to being normal again for 2 seconds.
I am such a bad Indian, bro. If my grandmother found out that I eat cow, like because she knows I eat chicken. She doesn't know I eat cows. So
yeah, I know, man. It's the same thing with me. I grew up most of my life. I grew up like not eating meat because, you know, grandma would always say like, "Oh, you want that to happen to you," you know. So it's like,
like, imagine a world where animals ate you. I'm like, well, that world's not real. So
yeah, nah, bro. I like it. When you're in like, I guess the 3rd, 4th grade and everyone else is eating like regular food and you're trying to just eat those peanut butter and jelly sandwiches. I mean, there's enough days that go by and the peanut butter and jelly sandwiches don't work anymore. And you're just like, screw it. Let me just try that burger. And then like you see, like I secretly ate meat here and there, but like you didn't eat anything at home. And then like when I was in the army, that's when you didn't really have a choice. Like it was like, oh, you gotta eat now. Like you know, the vegetarian option is just basically salad. And bro, you need that protein boost and that energy to keep you going. So it's not gonna work.
Well, speaking of energy, S&P 500, 573, well above the 200-day, 1.6%. First question for you, Kris, is do you trust this or are you calling BS?
I mean, I trust it to a certain degree. I mean, when I look at this, I'm gaming it out and I'm saying the people are pissed off, right? Like the general people are really pissed off at the market right now. You've got CEOs kind of calling in the Trump administration saying, look, your back and forth on these tariffs thing is really driving a lot of uncertainty into the markets. You know, I think some of the commentary by Lutnick and Scott Bessent has been sort of toned down a little bit. So it kind of shows that there is a level of market impact that, you know, the market is having on some of their decision making. So I think we're starting to see some of the tariff talks moderating. And I think that's bringing a little bit of a glimpse of certainty back into the market. So some people are saying, oh, you know what? Maybe it's time that we could be entering a bottom. And it does look like we're starting to stabilize a little bit. I guess April 2nd will be the real determinant on where we go from here. So yeah, I think everyone is just hopefully getting some level of, I don't know, stability. I guess that's what they're hoping for.
Okay, so then what would you say about Tesla, right? Because obviously 270 is aggressive. We know the quarter is probably not going to be the best. Does this make sense for it to be running like this? Is this based on algos? Is this on tariff delays? Like how do you rationalize this happening right now?
I think Tesla trades more on sentiment than it does really on fundamentals. And so the sentiment got super bearish. And I think right now we could be seeing a dead cat bounce on it. If you're purely looking based on numbers, I don't think the sales numbers are going to be very, very good, coming up. And I don't think that's a secret by any means. But once again, Tesla has never really been driven just purely based on numbers. So, sentiment is the key here. And so if the market sentiment is on risk on, then you're going to see all the risk on trades run, right? So you're looking at right now Tesla, you're looking at Bitcoin, you're looking at Palantir, right?
Yeah.
These companies don't trade on fundamentals, and if you expect them like based on fundamentals, and you always kind of miss the rises and the falls. Now, some people, they can invest more based on that kind of logic. For me, it's not really an easy thing to do, so I usually stay out of these things. But you've got momentum behind Tesla's name, and so that's why it's doing its thing right now.
So the tariff news from the Wall Street Journal last night, by the way, fear and greed went from extreme fear to fear. They basically said, hey, in a nutshell, the Trump admin is not going to be as aggressive as we thought they were going to be. And I think that's kind of why the markets are pumping. What do you personally think? You think April 2nd is going to be aggressive, or you think it's going to be, hey, we got these 5 deals done and the market's moon because tariffs just aren't as intense?
I think regardless of what the administration is saying, they're creating policy a little bit more, they're shooting from the hip. So when they see things go too much into one direction, they're changing some of the tone that they have. And it's the other way around as well, where if things are getting a little too euphoric, they don't have a problem of smacking things back down in order to control inflation. So
right,
I think that's why you're seeing this volatility where things will spike up, and then the administration will say something around tariffs and things will come back down again. And then they'll kind of moderate their tone on the tariff thing or delay a tariff, and then things go back up again. And, that's why you're seeing these moves up and down, but it's pretty much been moving towards the downside. I think if we start to level off a little bit on like an average and then start to rise up again, then that could be, it could be a time to actually pick things up that have been oversold. The only question that I typically have to ask myself when I look at this is what kind of system are we setting up for the consumer for probably the near term and the future? I've always been in the theory that the Trump administration needs to get a lot of their policies out the door by the middle of the year, and maybe a little bit past the middle of the year. Because if you're going into a recession or a weak economy in 2026, then you're going to have a bloodbath in the midterms, in which case then President Trump and his cabinet are pretty much going to be lame ducks fighting the Democrats in Congress the entire time. And I'm pretty sure that's not what they want to do, right? So everything that they need to accomplish within a very short window. And I think this is the window that they have. But that doesn't mean that they're immune to market forces, in which case the market corrects and then they end up ultimately getting the blame for that. Because the last thing you really don't want to go into a recession, even though that technically would cure the inflation problem, but once again, if you go into a recession, to pull yourself out of a recession is going to take a much, much stronger move to the upside in terms of stimulus, which could reignite inflation again. And that's not what you want. So this is like a really, really delicate balancing act. And I think the Trump administration is doing everything it can to basically slow down inflation while at the same time keep the markets healthy enough to the point where people are not losing their jobs to the degree
But
where they're
how
going to end
do
up
how do
getting
you make
screamed in
sense of this?
midterms.
How do you make sense of the 10-year? How do we like this is obviously not what the administration wants right now.
Well, the thing is, unless you start lowering, I think we've gotten to the point where the long rate is going to stay at this rate until the short rate gets like super low. So right now, if you go to the bank right now and you do the federal funds rate, right, you're basically going to get 4.25 right now from your bank. So what incentive is it to go and term out the debt of 10-year? There's no incentive. Now, on the other hand, if Jerome Powell said, hey, listen, we're going to cut 5 times this year, what's going to happen? That means that now everyone's going to be buying up the 10-year and terming out their debt. They're not going to be just chilling in their short-term treasuries. Because the last thing you want to do is buy a 10-year treasury, inflation skyrockets, and now 10-year goes up to 4.8, 4.9, and you're basically losing money. Right. So instead, it's like, hey, listen, I'm not really dealing with a lot of duration risk right now because according to the Fed, there's only 2 rate cuts. So it's not really a big deal to worry about. The other thing is maybe the market is assuming we're going to be in this, higher for longer inflationary environment like the SEP is saying, and we could get some stagflation. So people are a lot less likely to want to accept a 4.3% return for that stagflationary environment, because technically on a real basis, you're not really getting a great return,
Right. No, that's fair. That's fair. And I guess the administration is going to have to figure out how they navigate it. Tesla right here is up 9%. Robinhood's up 9%. It's obviously a massive risk on day right now.
To be honest, I think we've already seen the opening salvos of rate reductions by the Fed. There's 2 things that we saw this Fed meeting that made a lot of sense to me. Number one, we saw them reduce down their balance sheet roll off from I think 25 billion to 5 billion. So that alone is even though it doesn't seem
you're
like
talking about QT slowing down essentially.
Yeah. So to me, whenever I see something like that, I think of QT as like gravity, right? So if you look at QE as, think of gravity as being 1. So if you're going into QE, you're reducing down gravity, which means that the move in stocks going upward is easier, right? Now, when you're ratcheting up QT, it's like you're turning gravity on, which makes it harder for valuations and the stocks to move up. Now, the thing is, if you're reducing down QT and you're actually getting it closer to just 1, which is normal gravity, that means that you're kind of like taking off a little bit of pressure on the markets. So I think we did get sort of a cut, even though it doesn't seem like we got a cut. I think we got a 1/4 basis point cut, but it didn't feel like it. Right? Like it's not an official cut. So that's one thing. Another thing to consider is also how the Fed is going to move between its MBS holdings and its treasury holdings. And also at the same time, some of the regulatory changes around banks lending. I think that's one thing that we also have to keep in close watch. Once we get some sort of certainty, then, I think the market could do well for the rest of the year. The only thing that I have to just remind people is that, remember, we are a bit still overextended on the S&P 500. Okay, so we're not at a point where everything is oversold to a degree where the valuations are undervalued. Like you're still paying a good amount for the index. So
It's at what, 21 times, 22 times?
Yeah. I think usually you want to see like the markets. Usually, if you're below like let's say 17, 16 for the markets, that's usually a good place to be. But then when you're hitting like the 21, 22, you're not like overvalued, but you're not cheap. You're not in the greatest. You're not cheap. Yeah.
What do you think about Q1? I mean, like we had some really weird Delta guidance and all this stuff about the consumer. Like, do you think Q1 could slap everyone in the face and we could see that there's a bigger issue than we expected?
Yeah, I mean, if there's a massive amount of earnings revisions downward, then we could definitely see that. And if consumer sentiment weakens enough, then that's definitely a possibility, right? So if consumers stop spending, and it makes sense, right? The Fed, right? I mean, the federal government is doing everything it can to basically lower liquidity into the system. They're basically, cutting spending as much as they can. And so when I look at this, I'm like, okay, there's less people buying goods and services, and chief among them is the U.S. government, which is the largest buyer of goods and services in the country. So if they're cutting back on spend, eventually that's going to translate into people's earnings, right? Companies' earnings, and it's going to take time before they're able to make it up via some credit creation on the private side. So there's a point where you could say that you should be this year at least a little bit more defensive on how you approach the market. Usually when things are oversold, I think it's a good opportunity to buy. But then when things are overbought, it's also a good idea to maybe hedge a little bit and make sure that you're, like keeping yourself grounded from these massive downward moves.
Yeah. No, it's a fair point. And I think a lot of us now are a little bit more skeptical when everything just keeps running up, because in February, no one was realistically skeptical of all that momentum, and everyone got clipped. And I think,
and I asked myself why I missed this, and I have to ask, and the only reason why I guess I could say I missed this like move down in terms of like making the call and just selling a lot of things.
I know why. It's because you were in a trance from watching my show every day, and the bell rang 10 times a day, and the bell put you in a trance. It was hard
No. I was thinking more along the lines of Trump being a little bit more in tune to measuring his success based on the markets. So my thinking was there is that pain threshold that Trump is willing to basically like let us endure is a lot higher than what we're dealing with right now. So I think the Trump administration this time has basically said like, no, like our goal is to crush inflation and we're going to do everything in our power to do it. And that if that means that we can sink markets in the short term, that's fine. I'm sure of it that Trump right now seeing the markets, even though he said he's not looking at the markets, has something to do with the tariffs moderating a little bit. And so it is playing out that way, but it's not to the same degree that I believed when we were coming into this in February. I thought really there was going to be like a Trump put where if the markets were going down, he would roll back the tariffs. He would like stop the talk. Instead, I think they're more likely to just moderate their tone rather than not talk about it at all or take the tariffs off completely.
So then when you see a Tesla at 274, do you get scared, or what do you think?
No, I mean, I just think that the markets are
because what you just said is you missed when things were getting super aggressive because of your interpretation of Trump. At least on Tesla, it's getting super aggressive again, right? Does that?
I mean, it's a one-day move. It's not that big of a trend yet. I mean, if this goes back to like the 350s or something, then yeah, you can say that there's been a complete reversal in sentiment. But one-day moves like this are not necessarily like, even though it does seem kind of rather exaggerated, it's not the end all be all. And remember, Tesla is it is a cult stock, all right? And so the cult is very strong among Tesla holders. So even if, like I said, the numbers are looking like they're going to operate, come up very poorly, there's a lot of people that are like completely, disconnected from the business's performance. Their entire narrative around Tesla is, we have the greatest company on the planet. We're going to buy this. We're not looking at this a year from now, 2 years from now, even 5 years from now. We're looking at this being the largest company on the planet 10 years from now. And because of that thinking, they think 270 is a really, really good deal. They'll buy.
No, that is fair. Okay, so last question for you, Kris. What are you buying now? Or are you just holding and keeping cash on the side?
No, I'm just holding things that I have. I may sell some covered calls on some of my positions that I have. Like,
look at you coming a little wheeler, huh? Look at that.
I wouldn't say wheeler. It's just more of a hedge to make sure that any downside moves that I have are or at least the markets move downwards, gives me a little bit of a hedge so that I can take that additional cash and reinvest it back into the company that I believe in.
Right.
So most of my positions right now are pretty much hedged because, me, I have spread plays. Even with stocks, I have covered calls here and there. So for me right now, this year is going to be a year of volatility which means when volatility spikes and stocks get overbought, it's usually a perfect time to sell some covered calls and, you know, get some money out of the whole situation and keep that cash on the side and buy things that are oversold. Like right now, I think the cruise lines are a little oversold. They had a great earnings, especially Carnival showed that, you know, there's no shortage of demand. They're doing really well. They're focusing on all the right areas. So whenever things go on sale, you know, I have the cash and the liquidity on the side to buy things. So I think right now, this year is the year for people who understand volatility and how to basically play the volatility to their advantage.
Yeah, I agree. It is. I don't think we're out of the woods yet. The 10-year is spiking pretty aggressively right now, 4.323. Trump has a cabinet meeting today, so let's see if we can get through a day of holding 2% on the S&P. But if we do, not the worst in the world.
I think the biggest news that no one's covering is actually around shipping. Did you see that, by the way? Like what the Trump administration's proposing?
I feel like I saw the headline, but I don't remember. This came out a couple days ago? Or?
No, it's been around for about a month.
Okay.
So U.S. Trade Representative, they have recommended basically being very, very punitive to Chinese shipping. Any ship that enters U.S. ports right now, basically they're looking at hitting them with $1 million per ship as on port fees.
Wow.
And if they're owned, look that up. Look that up on look that up and you'll see what I mean. So they're doing hearings about it today, actually, about how to proceed with this. But basically they accuse China of China's like supporting their shipbuilding industry and basically hollowing out the shipping industry around the world. And so if your company is a Chinese company, then you're going to get hit with a giant hit. And this is per ship. Okay. So it's a crazy amount. And then on top of it, let's say you have a fleet of 20 ships and one of them is Chinese owned. That means that if you come in, if like any of your even other ships come in, you're going to get hit with fees.
How is this? What's the bull and bear case to this? Like, why do you mean
this is good for U.S. if the U.S. wants to get back into the shipbuilding side, but it's bad if you're on global trade. I mean, dude, it's $1 million per ship. It's a freaking crazy amount. The other challenge is, boats have to land on your shores to pick up stuff to export them, right? So that could leave a lot of people on the exporting side here in the U.S. in a bind as well. So it's not just going to hurt people that are importing stuff, but it's also going to hurt people on the exporting side. So if you work in agriculture, if you have a product that does anything shipping that ships out, which is like pretty much everything, then you're going to have to end up facing higher fees to get it out the country, not just in terms of retaliatory tariffs, but then also shipping. So this is kind of a delicate thing right now that's happening. I mean, it's not being spoken about a lot, but this could cause a lot of chaos in the markets if this actually goes through. So definitely worth keeping an eye on.
Yeah, I didn't even hear about this, dude. I didn't know this was a thing. So this is another variable, I guess, to consider along with tariffs. But
yeah, I think the total impact is going to be about $100 billion a year of like shipping issues, like, between, like I said, the Trump administration right now is really focused on domestic manufacturing. But the thing is, it's, in my opinion, it takes time. You can't just impose something like this and then not expect the ramifications to be both on the international side and on the domestic side.
Yeah, that's fair.
Yeah.
All right, Kris, thank you. Appreciate your thoughts this morning. Kris's Twitter right here in the chat, and we'll talk to you later this week.
All right. Have a good one, guys. Take care.
Have a good one. All right, so it is 10:30. We have not had the 10:30 slam yet. Robinhood up a whopping 9.5%. Tesla hit 274. It's up 9.8%. $24 on the day for Tessie. Even Palantir holding 95, up 5%. It hit 96 at one point. SMCI is down. Netflix is down. Everything else is relatively green. NVIDIA, not a really big day, but still some green at around that 120 part, 120.6. And then you got your spec names like an Archer. That's up 4%. VST data centers are up a little bit, and then Rocket Lab's up 6%, 20.11 right now. Qs couldn't get above 480. The Qs 489. I think you mean 490, right? We're above 480, 489. 500 on the Qs would be a hell of a move. If we can see that level again. Year to date, last time we were at 540 on the Qs on February 19th. Goodness, man. Talk about an aggressive move. So we were at 540. We came all the way down to 465. In August, we went to 420 when we had the yen carry trade. We were at 536 December 16th, 540 February 19th. Now we're at 489. To be honest, kind of a healthy little pullback over the past month. But if we can make our way back up to 500, that would make NVIDIA and a lot of these guys get some love as well. Yeah, Kris just sent me this piggybacking off the ship stuff he was talking about. China's Costco may be shipping war's first casualty. Oh, wow, this came out this morning. The world's largest shipping group is sailing into a perfect storm. Chinese state-owned Costco Shipping, not to be confused with Costco in America, but Washington's proposed docking fees on China-linked vessels and tariff swallow will dent demand for its services. 23 billion port sales also suggest trade will reroute to Western peers. The $30 billion conglomerate is the world's third largest container transporter and fifth largest port terminal operator. Its parent also owns the largest fleet by tonnage globally. Currently, the company boasts a lending 15% market share in the vital Trans-Pacific Ocean shipping route, according to analysts at JP Morgan. This is something I have not looked at all, so I'll dive deeper into what's going on with the ships and what that means for fees to the tune of $1 million of ship we're imposing on these routes. But that could be definitely something that creates some more volatility, given it is a $100 billion market. Tesla, some red candles at 271, still holding on, up 9% of the day, but you do have some red from 275. Palantir as well, a couple red candles, same thing with Hood. So broader market seeing very small red candles, but overall holding on to the green they got from this morning. Will Amazon get wrecked? Well, Amazon ships a lot of stuff, so that definitely won't be the best for Amazon. Amazon again, dude, 189. It fell to those lows, now above 200. Tariffs are not bullish for Amazon, but if we get rid of tariffs or we don't impose them as aggressively, that's not a horrible tailwind. And then AMD as well. Great day for it, dude. It hasn't had a 6% day in what feels like forever. 112 on AMD. This one bottomed out at 95, 94. Now back here to 112.5 on AMD. Oh, there's no way. Hold on, there's no way. Did we just get a headline? Holy crap. I'm loading up Truth Social. Did he actually just say this? Oh my God. Oh my gosh. All right, we got a tariff tweet. Where's the markets? Can't believe this is real life, bro. Do we have a red candle already? Yeah, there's your red candle. There it is. There she is, and she's getting more red. Let's see if it holds off. Okay, here we go. Trump on Truth Social. President Donald J. Trump announced today that the United States of America will be putting what is known as a secondary tariff on the country of Venezuela for numerous reasons, including the fact that Venezuela has purposefully and deceitfully sent to the United States undercover tens of thousands of high-level and other criminals, many of whom are murderers and people of a very violent nature. Among the gangs they sent to the United States, these have been some of the worst gangs in history. We are in the process of returning them to Venezuela. It is a big task. In addition, Venezuela has been very hostile to the United States and the freedoms that we espouse. Therefore, any country that purchases oil and or gas from Venezuela will be forced to pay a 25% tariff on all of the trade they do with the United States. Holy crap. Let me say that again. Any country that buys oil from Venezuela will have a 25% tariff on all of their goods. There's got to be a movie, right? To the United States. All documentation will be signed and registered, and the tariff will take place on April 2nd, aka Liberation Day in America. Please let this notification serve to represent that the Department of Homeland Security, Border Patrol, and other law enforcement agencies within our country have been so notified. Thank you for your attention to this matter. Okay, S&P is not really tanking on that yet. Tesla's not tanking yet either. So let's give this a couple minutes. This was literally posted 4 minutes ago. Market tends to react quickly if they're not. Look at Palantir, 96.18. If the market's not going down on this, maybe Trump's gonna have another tweet to get the market to go down. But this one's not really tanking the markets yet. That's aggressive though. Okay, hold on. Let's use some AI. How many countries buy oil from Venezuela? Let's see. Because I feel like it's a decent number of countries, right? All of them are going to get tariffed 25%. India, Cuba, Iran, Spain, Haiti, Bolivia, and then China. Those are just a few of the countries that Grok is mentioning right now. Do all of them get a like? It kind of doesn't even seem real, bro. So all of them are getting 25% tariffs across the board. Like, I'm not buying that. That seems like bullshit. That seems like flat out bullshit. Like, there's no way all those countries get a 25% tariff across the board. We're gonna put 25% tariffs across the board on Spain and Cuba and India, where we have our own negotiations with India, but India's buying oil from Venezuela, so they're part of this 20. Like that. I mean, even reading it felt like bullshit. And if you know what it felt like, conspiracy hat on, it felt like him trying to get the 10-year to come down and tank stocks. That's what it sounded like. But I don't know if he's going to succeed at that. Hood's up 10% on day. Yeah, the market's ignoring this, dude. The market's not caring about this. The market is not letting that stop the rally. This is impressive. Palantir's about to hit 97, or wants to hit 97. This is impressive for the market to not tank on that, even if that headline is BS, for the market to now react in a way that legitimizes the BS of that headline, because, like, I feel like it's just pure nonsense. Tesla's still holding 272. This is pretty impressive. This is pretty freaking impressive. Yeah, also it's Venezuela. It's not, we don't do that much trade with Venezuela. So it's like, unless he's doing this to try to get Venezuela to negotiate on the, that's what it sounds like. It looks like he's trying to get them to negotiate on the gangs and the illegal immigration more so than this transitive property of, if you work with them and we work with you, then you are tariffed 25%. Like, it seems so aggressive to even put something together like that. It doesn't sound real. Rocket Lab right here up 6%. Palantir, let me check resistance to 97, but Palantir completely brushing off the threat of tariffs and going a bit higher right here. 97 resistance on Palantir as 26,000 shares. 26,000 shares. Yeah, you guys are saying it feels like negotiating. It feels like that as well. 1030 slam is way behind us. That is correct. Dude, but even for that headline to not have an impact is pretty insane. Like, Robinhood's about to hit 49, bro. Robinhood 5 cents away. It wants 49. It looks like it wants 50. That's what it looks like. And Tesla, even if Tesla closes up 6% on the day instead of 10%, I mean, what a move for Tesla. 271 is not bad. And the S&P is still healthily above 1.5%. I don't know. That move feels a little bit more like negotiating versus something real.
That could bring the consumer confidence back towards where it was pre-tariff talk and what happened right after the Trump election.
But so, Jeremy, from a market perspective, I'm just curious then as to what you're seeing. The Mag 7, which led us for so long, obviously has not recently, but the multiples have come down rather sharply, and there's still a lot of questions as to whether demand, for example, for the hyperscalers and the like has really been impacted at all. I'm curious as to where you're sort of landing these days when you look at value.
Yeah, well, people ask me, we had that 10% drawdown. It's a little less now, so in the S&P. I said 80% was the tariff talk, but I think 20%, I mean, there are a few cracks in AI. I mean, it started with DeepSeek.
97 on Palantir. We hit it. 97. 97.39 got rejected right at 97.39. Now we're right below 97 and 96.92. but that's a 7% move on the day for Palantir. It's been a long time since we saw 7%, but there you go, 97 on Palantir.
BYD, is China being able and others to implement AI without the highest end chip products? The word about, I think that people fear most if they're big tech investors is commoditization. Is it going to be much cheaper to produce it? Now, that's going to benefit all of us, but it ain't going to benefit, a lot of the chip producers that use the AI. So I think there's still some concern, and that's part of the rotation, I think, that was from the Mag 7, which really were not that affected by the tariffs, but the question of, will they be able to maintain the margins that they once have?
All right, let's get an update on the tariffs. We just got that right now.
House has got some breaking news for us. Eamon.
David, that's right. The White House just posting on social media here just a short time ago that the president is going to impose what they're calling secondary sanctions on Venezuela, secondary tariffs, I should say, on Venezuela, using the tariffs as if they're a sanction. In this case, the president posting on social media, any country that purchases oil and gas from Venezuela will be forced to pay a tariff of 25% to the United States on any trade they do with our country. All documentation will be signed and registered, and the tariff will take place on April 2nd. So what the president is saying here, David, is that because of immigration and legal concerns he has with Venezuela and the way they're negotiating with the United States, any country that does business with Venezuela will see that 25% tariff kick in on April the 2nd. All of this will be papered and legal on that date, he says. That's an innovative use of the tariff power, to say the least.
I don't think it's innovative. I think it's absolute BS. I think it's, I think this makes no sense. And I really think that they're trying to get that 10-year to come down, dude. This is like ridiculous. Because China also trades with Venezuela. So China gets 25% across the, like, it's not thought out. Yes, Venezuela, we have problems with them. But this idea that we're going to have these secondary tariffs on any country that works with them, I don't think that makes sense.
I have not seen that before. I have to go back and check sort of what the precedents are for that. But that raises an immediate question for anybody who is doing business with Venezuelan oil. Do they run the risk of getting afoul of U.S. tariffs if they continue to conduct that trade? So a fascinating one here at the White House this morning, David.
China is a big buyer of Venezuelan oil, and so this sets up maybe a more confrontation with China, especially as Western sanctions have hit Venezuela. They've sold even more to China.
That's a great point. And the question I would have immediately is the president's 25% that he's talking about here, in addition to the tariffs that he's already announced on China? So if you're China, are you talking about 45, 50% tariffs on Chinese products? Because what the president says in this social media post is that 25% trade secondary tariff will go into place on all trade that country does with the United States. So that is a huge ramification.
And it doesn't make sense. So Davis says right here, it doesn't have to make sense. If this is how he gets the 10-year down, why wouldn't he do it? It has to make sense for the market to believe it, right? The reason the 10-year is pumping right now, we're at a high of day on the 10-year, is because everyone's calling bullshit. No one believes this. No one believes that every country that does trade with Venezuela is going to get a 25% tariff across the board because the United States has immigration issues with Venezuela. Like, it has to be somewhat believable for the perception of it to be, oh, let's buy bond yields because we need to lock in or let's buy bonds and that yield will come down because we need to lock in our yield, given we're going to deal with all of this massive tariff volatility. But this is just not believable. I mean, like a kindergartner wouldn't believe this shit. Like, this is like, you got to be, you got to have something more aggressive than, hey, if you're his friend, then you're not our friend anymore. It's like, no, dude. And the market is obviously ignoring it. Nothing is really I mean, the S&P is almost up. The S&P is up 1.72. That is a high of day on the S&P. It looks like it wants to go for a 2% day. And you would think with a tweet like that, if the market believed it, that's not what would happen. So this is why he should just do it. Well, again, I mean, like, but that's the thing, right? Like, if he should just impose 25% tariffs across every country working with Venezuela, it would be an absolute shit show because that's not how trade policy works. Like, you can't just do that, dude. There's way too many factors that are involved in this. We can't just do 25% against China overnight, because you know what China would do? They would do 25% against us, and China sells us a lot of shit. There's a lot of businesses that would go belly up overnight if that happened. Like, it's just not real anymore. It really is the boy who cried tariffs right now. That's what that tweet felt like. And so I'm happy the market's ignoring it, quite frankly. The market's just calling BS on it. And he's going to have to try a lot harder to get the markets to be upset at that. Because it is just not convincing at all. But granted, I mean, we still have a lot of hours left in the day. We have to see how it plays out. You know, maybe Trump doubles down on this in the cabinet meeting. Maybe he like really tries to say, no, I'm serious. I'm going to do this, even though I don't know how you would do this. Like, I don't think it makes sense. But I don't know, dude. It really felt like one of those tweets to get bond yields to come down. And they might have to try a bit harder than that. SoFi right here up 4.5%. Again, the S&P high of day completely ignoring that. Q's high of day up 2%. Amazon high of day. Amazon should be going down if we were putting 25% tariffs against everybody. That's not happening, up 3%. And then Robinhood 48.79, basically a proxy on the bull market. That one's up 10% on the day. Wouldn't China just cut out Venezuela? No, I don't think China, to make America happy, would cut out all their dealings with Venezuela for two reasons. Number one, China doesn't like the United States that much. They don't want to give the United, like, even India is a way better partner for us than China from a democratic perspective. And guess who India buys a shit ton of oil from? Russia. Do we like that? No, but India's got 1.4 billion people that need energy. And so they're going to buy some cheap oil from Russia, whether we like it or not. So I don't think China's going to negotiate because we don't like Venezuela because of their immigration problems. Number two, I don't think China thinks he's serious about putting 25% tariffs. And if they did think he was serious, they wouldn't stop working with Venezuela. They would just impose their own 25% tariffs. I mean, like, China is not an economic power that we can just ignore, even if their economy is struggling. They still, manufacture a majority of the world's products, and a lot of that gets sent to the United States. So I don't know. I don't believe that tweet. The market does not believe in that tweet, but later throughout the day, we'll see how this plays out. Palantir right here at 96.40, Robinhood 48.62, Tesla 2.72, all of the big names holding their momentum. Celsius up 3%. Next Decade, natural gas getting a bid right here. Apple's up about 1%. Meta, Google, all of those as well. Wow, look at that. Amazon's up 3%. Google's up 2%. NVIDIA finally breaking out, up 3.5%. Tesla still up 9%. And then Meta, 3.5% as well. Microsoft and Apple, the only ones that are lagging today. You could also argue they're the most overvalued out of the Mag 7. But those not going as green right now. What's for lunch, Amit? I can finally buy food again. Oh my gosh. Today's not a horrible day to send some covered calls. Today's not a horrible day. I know it's a lot of green, but even if it's far out of the money, collecting a little bit of premium. Tesla 300. Look, maybe it gets to 300 in a month. Maybe it doesn't, but there's definitely, let's just look at that right now. 300 on Tessie, April 25th, about a month from now. Premium on that is $1,300. Someone is willing to pay for Tesla going to $300 by April 25th. There's not that many stocks that have these types of premiums, dude. There's I would say maybe 25 of them in the whole market. Tesla's one of them. Now, granted, the risk is, Tesla can go down, and so your covered calls print, but your shares go down. But there are people that on a day like this, and if you don't want to do 320, you want to be more conservative, go to 350. That's paying you $400 a contract. Go to freaking 400 if you really want to be. That's paying you $140 a contract. Someone is willing to pay you $140 for Tesla going to 400 a month from now. And if it happens, do you really hate selling some shares at 400? It's one of those things, but these premiums can get really juiced up. Robinhood right here, 48.45, taking a little bit of a breather. You got some red candles right there from 49, but we are still green on the day. And then Coinbase as well, up 5% on the day. The tweet was about Venezuela. That was, for those that have just missed it, Trump tweeted that any country that does business with Venezuela will get taxed 25%. But the markets are not buying that right now. Yeah, the people who bought those Tesla puts, dude, they're they're not doing that well. You got 1,000 volume on those puts already. I mean, probably not necessarily doing the best. Let's hear from our boy Brent Thill, who doesn't really love Palantir. Let's see if he has a bull case for Microsoft right here. He still has his underweight rating on Palantir. Let's see if we get any commentary there and what he thinks about Microsoft right now.
Around all this AI news, or did it get swept up in part of a broader sort of de-risking around the Magnificent Seven names?
Good morning, Sarah. It's a de-risk across tech. Second, the AI CapEx spend. Third, I think the worry of the OpenAI relationship are they going through divorce court, or are they going through makeup court or makeup therapy? And then I think ultimately they've missed the last 3 quarters in Azure. So Amy Hood, the CFO, has been known for being very consistent with her guide. She has not had great success the last 3 quarters where they've actually come in at the lower end of Azure. And so it's caused investors to rethink, how fast is this AI ramp happening? We believe AI is going to take a lot of time in software. It's not like NVIDIA or the infrastructure trade for AI. You can't just buy these pieces and then it's reported revenue. Many of these AI services are recurring. They're subscription based. They take time to build, and they're really young. They're infants, and they're still being trained. They're not fully riding the bike without training wheels. And so AI is still going to take a long time to roll out inside these enterprises, and it's going to be a slow ramp, but it's going to go quick, and we think it will be meaningful over time. The expectations just got way too high.
Well, then why do you want to be in Microsoft as a winner then, with some of those concerns that you outlined? If a part of the optimism was around OpenAI and their questions about where their partnership goes, and as everybody competes for a piece of enterprise AI.
We still think they're in one of the best positions with their portfolio. If you look at what Microsoft did, they led this charge across tech. They were the first ones to raise their hand and say, this is happening. They were well positioned with their partnership with OpenAI. They have other partnerships in AI. We think effectively many of their products, they've infused AI across their security portfolio, their application portfolio, their infrastructure portfolio. If you look at software developers, most software developers are using Microsoft to develop code, and the impact of AI in their development portfolio is incredible. So we think they have a full stack of solutions. We think, again, they're growing double digit. They're still improving operating margin. Operating margins are expanding the age of AI. Despite all the big investments, they're improving their margin. And that's testament to how good their finance team is in terms of the operations. So again, I think there's other pure play names that may act better and offer better performance. But Microsoft, again, is trading at the lower end of its multiple range when you look at the range in terms of the multiple. So we think it's become attractive now given this pullback, and they're still in a really good position. Second, the other point is from a revenue impact, they actually have today one of the highest % of total revenue in AI. If you look across the industry, Salesforce.
I think the biggest problem with Microsoft, again, we talked about it a while ago, is just it's not a narrative oriented AI stock, which is why the thing has not moved in the past year. I mean, like, you can look at all the different elements of how they're succeeding in AI, whether it's Copilot or GitHub or Azure, which Azure I would say is like 95% of it. But it's just people don't think this is going to become a 6, 7, 8, $10 trillion company. It's stuck at just under 3 trillion right now. What is the catalyst for Microsoft to be a $10 trillion company? Where's the innovation in robotics? Where's the big bets? To give credit to Google, they're taking bets on robotics. They're taking bets on self-driving. They're like trying to do things that could give them a very enticing multiple over the next decade if those bets play out. Microsoft's big bet has been giving Sam Altman $13 billion. And I mean, like, Sam Altman hoard himself out to anyone who could give him money. So it's one of those things where it's like, I think their big AI play did not really work out as people thought it would. NVIDIA right here, 121.58, that's up 3%, but Azure is still the king in all of this. So As long as they can keep scaling that, that's still a great business. Robinhood 48.22. All right, so we are getting some red candles now at 11 a.m. Definitely seeing a little bit more weakness. Palantir went from 97 to 95. Makes sense. Probably was going to get a little bit of red candles throughout the day. By the end of the day, it will be very interesting to see, can Palantir and Tesla hold 270 and 95? Or are we back to 260 on Tesla, which is still a green day, even if it's not 9%. And we're back to 92 on Palantir, which is still a green day, even if it's not up 7%. Same thing with Hood. Same thing with the S&P. But a couple red candles right here aren't crazy to see. All right, cool. I think that is it for us today. We will be back on the market close and see how this market ends up playing out. I think the Trump tariff tweet is not going to have that much of an impact on the market. He will be having that cabinet meeting today. If that's in public and they take any questions, he could say something that creates some more pain. But as of now, the market's not buying it. The market is just not buying it right now. All right, word of the day. It should be medium well, given all the backlash I took last night on Twitter because of that take. But word of the day is latent.
Latent.
Present but not visible. The forest fire was sparked by a latent ember from last night's campfire. The cat's infection moved into a latent phase. Okay, latent is not the word of the day. The word of the day is 200-day-moving-average. Okay, that's the word of the day. Everyone should go up to a loved one, your girlfriend, your mother-in-law, your sister, your brother, your dad, your best friend, and you need to tell them, did you know the S&P 500 has reclaimed the 200-day-moving-average? And when they say, what the hell are you talking about? You just text them a screenshot of the S&P 500. That's it. That's what we got to do today. That's what we got. I'm going to do that today. I'm actually, I'm going to text a bunch of people that don't care about the markets. Did you know? I just want to see their, I'll try posting some on Twitter. I'll see what they say. I'm going to text my mom that, dude. I'll text my mom that right now. Let's see how she reacts. All right. I was messing with my mom this morning because she texted me and my cousin in a group chat. She's like, "Hey, breakfast is ready if you want to eat any breakfast today," because she's staying over with us. And I was like, "Wow, you actually cooked today because we have a guest over. I wish we would have guests over forever." Mom's like, "Shut the fuck up, bro." I always mess with her that she doesn't cook unless we have guests over. Okay, Mom, did you know that the S&P 500 just reclaimed its 200-day moving average? Let's see what she says. I did ask my mom about the Department of Energy thing, Department of Education, because she's been a teacher her whole life. She didn't care, bro. She didn't care. She was like, okay, whatever. She did not care, bro. She was like, as long as the State Department doesn't go away. I was like, no, it's a federal thing. She's like, all right, yeah, whatever. So, yeah, my mom really did not care that much. Doug says the problem DJT has is no one is selling stocks and buying bonds and tariff fears. They're going straight to gold. Yeah, that's a good point. Where's gold right now? Is gold up today or is gold down? Gold's down 1% today, but still above 3,000. So you got somewhat of a sell-off on gold for equities, but people are buying gold over bonds more. And that could also not be the best in the context of what Trump wants for these bond yields. Mitt's mom should impose a 25% meal tariff. Dude, I always make fun of her because when we have guests come over, she like turns this house into like a 5-star restaurant. But on a regular day, dude, my mom does not cook me food. I just want to let you guys know. I know I live with my mom, but she doesn't make food. Like, I'm responsible for my food throughout the entire day. My mom doesn't have time for that shit. She works, so she doesn't come home and make me dinner after the market closed. Like, I find my own way to eat. So, but when we have guests over, it's like freaking, it's a Michelin star restaurant at the freaking house with all this food. She does not cook steak. One day she should be able to. She doesn't eat steak or shrimp or any of that stuff. She eats chicken, but me and my sister are the only ones in the house that like eat steak or ribs or any of that stuff. So, all right, cool. That's it for today. I'll be back tomorrow on the market close. Again, make sure to text somebody that the S&P 500 reclaimed its 200-day moving average. Hopefully we have enough energy in the world to get the S&P to stay above the 200-day moving average. And yeah, make sure you tell someone. And then, I don't know, you can tweet their response to me. I would love to see what people have to say. All right, cool stuff. We'll be back for the market close. Bye, everybody. Have a good one.